Okay, hi everyone, and welcome to this fourth and final round of workshops for listed companies and financial institutions in Thailand, where we today are going to discuss the role of TCFD in finance. As you may remember from previous workshops, the TCFD stands for the Task Force on Climate-Related Financial Disclosures. My name is Fred. I'm from an environmental organization called CDP, who runs the world's largest platform and framework for corporate environmental reporting. Some of you may remember me from the previous rounds of workshops that we have hosted, and I'm happy to be back with you again today. I am based in CDP's Hong Kong office, where we work with companies throughout Southeast Asia, and I will be the moderator for today's workshop. Before we get started, just a few housekeeping rules. All participants are muted on entry to avoid background noise. If you have any questions, please feel free to submit them in the Q&A chat at the bottom of your screen throughout the event. So please do not use the chat function, but use the Q&A for questions, and we will do our best to answer them at the end. We are going to have multiple Q&A sessions today, so hopefully we can get through all of them. And then lastly, please note that this webinar is recorded, and we will share a link to the recording and slide deck with you after the event. And finally, I also want to highlight from the previous slide that we have dual interpretation available in this workshop today. So if you prefer to listen in Thai, you can go to the interpretation button at the bottom of your screen and select either Thai or English. I would like to also briefly share some information and context as to why we are here today. This capacity building program is made possible by the UK government through funding from the Department for Business, Energy and Industrial Strategy. And the project is called UK-backed Green Recovery Fund. And this program is part of the UK government's commitment to tackle climate change. And they work with partner countries and organizations such as CDP and GRI to pursue greater climate action. Alongside our partner, the Global Reporting Initiative, or GRI, we have been delivering capacity building and training for listed companies in Thailand on corporate ESG issues, or environmental, social, and governance issues throughout 2021. From CDP's side, we are focusing on best practice when it comes to corporate environmental action and reporting in the context of the Task Force on Climate-Related Financial Disclosures, or again, the TCFD. Our partners at GRI have focused on how you can align your business goals and KPIs with the Sustainable Development Goals, or the SDGs. And so far, we have hosted 6 workshops in Thailand on a range of topics, and you can find all of the recording on the Stock Exchange of Thailand's YouTube page by following the link on the screen here. We have also translated selected TCFD reports from English to Thai, which are already available on the TCFD Knowledge Hub website, and we will share them with you after the event. One of these reports is also available on the Stock Exchange of Thailand's website, and you can follow the link on the screen for that as well. That brings us to today's workshop, which is the 7th and last workshop that we are hosting in Thailand as part of this project. In the previous rounds of workshops, we have focused on various environmental actions and initiatives that companies can take to improve their environmental performance. Today's workshop is slightly different, and we will focus on the role that the TCFD plays in finance. So again, thank you very much for joining us today, and a big thanks to the UK-backed Green Recovery Fund and the British Embassy in Bangkok for making this capacity building program possible. And also a big thanks to our partners at the Stock Exchange of Thailand, who is providing invaluable support in developing and implementing this project. Here you can see the agenda for today. The workshop will take about 2.5 hours with a break in the middle. First, we are pleased to have opening remarks from the Stock Exchange of Thailand and the Securities and Exchange Commission. This will be followed by an introduction to the workshop by my colleague Monica here at CDP. And then following the introduction, we will go into part one of this workshop where we will share about international ESG frameworks and sustainable finance. Here we are joined by experts from CDP, GRI, and PCAF, which is the Partnership for Carbon Accounting Financials. After that, we will have time for some Q&A and a short break before we return for part two of the workshop. In part two, we will look further into risks and opportunities again and the role that sustainable finance may play in decarbonization. We will also have a panel discussion to hear directly from some of the key financial institutions on what they are doing around sustainable finance and environmental management. And lastly, we are pleased to be joined by the British Embassy in Bangkok for closing remarks. So as you can see, we have a full schedule today with many great speakers, so it should be very interesting. So without further ado, to deliver the first opening remarks, we are pleased to be joined by Kun Ratwali Anantananont, Executive Vice President and Head of the Sustainable Development Group at the Stock Exchange of Thailand, who will share some words through a recorded video message.
สวัสดีค่ะท่านผู้เข้าร่วมอบรมทุกท่านในนามตลาดทรัพย์แห่งประเทศไทยขอต้อนรับทุกท่านเข้าสู่หลักสูตรอบรมเว็บบินาร์ TCFD SDG Workshop นะคะซึ่งเป็นความร่วมมือระหว่างตลาดหลักทรัพย์ UK Pack Green Recovery Challenge Fund CDP แล้วก็ GRI สำหรับหลักสูตร TCFD in Finance ในวันนี้ทุกท่านจะได้รับความรู้และเกิดความเข้าใจเกี่ยวกับบทบาทความสำคัญและประโยชน์ของการเปิดเผยข้อมูลด้านความยั่งยืนของบริษัทจดทะเบียนตามข้อเสนอแนะของ TCFD ให้สอดคล้องกับมาตรฐานการเปิดเผยข้อมูลด้านความยั่งยืนในระดับสากลของ GRI, CDP และ SDGs และได้เข้าใจถึงสิ่งที่สถาบันการเงินการลงทุนให้ความสำคัญประกอบการพิจารณาให้สินเชื่อหรือว่าเป็นการให้บริการทางการเงินและการลงทุนอื่นๆแก่บริษัทจดทะเบียนและภาคธุรกิจนอกจากนี้นะคะในวันนี้เราจะมุ่งเน้นที่การแลกเปลี่ยนมุมมองและตัวอย่างกรณีศึกษาของสถาบันการเงินการลงทุนไม่ว่าจะเป็นธนาคารพาณิชย์หรือว่าเป็นบริษัทจัดการลงทุนที่มีบทบาทอย่างมากในการนำข้อมูลที่บริษัทจดทะเบียนเปิดเผยไปใช้จริงในกระบวนการตัดสินใจลงทุนไม่ว่าจะเป็นเรื่องของการให้สินเชื่อให้บริการทางการเงินอื่นๆแก่ภาคธุรกิจซึ่งจะสะท้อนให้เห็นถึงบทบาทและความสำคัญของภาคการเงินและการลงทุนในการสนับสนุนการลงทุนอย่างยั่งยืนและการเปลี่ยนผ่านไปสู่ระบบเศรษฐกิจคาร์บอนต่ำหรือ low carbon economy ซึ่งกำลังเป็นทิศทางที่ทั่วโลกรวมทั้งประเทศไทยกำลังให้ความสำคัญนะคะตามที่ท่านนายกรัฐมนตรีได้ประกาศเจตนารมณ์ต่อที่ประชุม COP26 นะคะเมื่อสัปดาห์ก่อนว่าประเทศไทยพร้อมที่จะยกระดับการแก้ไขปัญหาด้านการเปลี่ยนแปลงสภาพภูมิอากาศอย่างเต็มที่เพื่อบรรลุเป้าหมายความเป็นกลางทางคาร์บอนหรือว่า Carbon Neutrality ให้ได้ภายในปี 2050 และมุ่งบรรลุเป้าหมายการปล่อยก๊าซเรือนกระจกสุทธิให้เท่ากับ0หรือว่า Net Zero ภายในปี 2065 ซึ่งที่ผ่านมาก็ถือว่าประเทศไทยสามารถดำเนินการลดการปล่อยก๊าซเรือนกระจกได้บรรลุเป้าหมายที่ตั้งไว้นะคะนอกจากนี้เองรัฐบาลยังได้กำหนดยุทธศาสตร์การขับเคลื่อนการพัฒนาประเทศด้วยโมเดลเศรษฐกิจ BCG ซึ่งเป็นรูปแบบการพัฒนาเศรษฐกิจที่มุ่งเน้นการพัฒนาอย่างยั่งยืนซึ่งรัฐบาลได้กำหนดแนวทางในการขับเคลื่อนเรื่องนี้เอาไว้แล้วอย่างเป็นรูปธรรมทั้งหมดนี้ล้วนสะท้อนให้เห็นถึงทิศทางของประเทศที่กำลังเดินหน้าไปในทิศทางเดียวกันกับประชาคมโลกนะคะโดยมุ่งส่งเสริมให้ทุกภาคส่วนไม่ว่าจะเป็นภาครัฐภาคเอกชนหรือว่าภาคประชาสังคมได้มีส่วนร่วมในการสนับสนุนการดำเนินงานด้านการเปลี่ยนแปลงสภาพภูมิอากาศอย่างจริงจังและเร่งด่วนภาคตลาดทุนไทยเองก็พร้อมที่จะมีส่วนร่วมกับทุกภาคส่วนในการเป็นกลไกขับเคลื่อนและสนับสนุนการดำเนินงานตามวาระสำคัญในระดับประเทศและระดับโลกนี้นะคะโดยตลาดหลักทรัพย์เอง ได้มีบทบาทในการสนับสนุนผู้มีส่วนได้เสียในตลาดทุนไม่ว่าจะเป็นบริษัทจดทะเบียนผู้ลงทุนที่เป็นasset owners แล้วก็ asset managers ผู้ให้บริการทางการเงินและการลงทุนตลอดจนหน่วยงานกำกับดูแลและพันธมิตรทุกภาคส่วนให้ร่วมกันในการส่งเสริมการพัฒนาธุรกิจอย่างยั่งยืนพร้อมกับสนับสนุนการลงทุนอย่างยั่งยืนและการพัฒนากลไกต่างๆที่เกี่ยวข้องใน ecosystem ของตลาดทุนเพื่อการพัฒนาตลาดทุนไทยให้เติบโตอย่างเข้มแข็งหลักสูตรอบรมในวันนี้นะคะเป็นเพียงส่วนหนึ่งของความมุ่งมั่นของตลาดหลักทรัพย์ในการสนับสนุนการมีส่วนร่วมจัดการภาวะวิกฤตด้านสภาพภูมิอากาศอย่างจริงจังโดยเราได้ทำงานเชิงรุกร่วมกับพันธมิตรในการให้ความรู้และสนับสนุนการลงมือปฏิบัติอย่างจริงเพื่อลดผลกระทบด้านสิ่งแวดล้อมกับภาคธุรกิจและภาคการเงินการลงทุนมาโดยตลอดสอดคล้องกับการประกาศเจตนารมณ์และความมุ่งมั่นของตลาดหลักทรัพย์ในการเข้าร่วมเป็น TCFD Supporter อย่างเป็นทางการงานวันนี้นะคะเราได้รับเกียรติจากวิทยากรผู้ทรงคุณวุฒิจากหลากหลายองค์กรทั้งในประเทศและต่างประเทศมาร่วมถ่ายทอดความรู้ประสบการณ์และมุมมองในฐานะผู้ปฏิบัติจริงก็หวังว่าทุกท่านจะได้รับประโยชน์อย่างเต็มที่นะคะแล้วก็กลับไปยกระดับผลการดำเนินงานที่เกี่ยวข้องในองค์กรของท่านและเราก็หวังเป็นอย่างยิ่งนะคะว่าทุกท่านจะได้เห็นถึงความคาดหวังของสถาบันการเงินการลงทุนและเข้าใจถึงประเด็นที่ธนาคารผู้ให้บริการทางการเงินและผู้ลงทุนกำลังให้ความสำคัญในฐานะที่ท่านกำลังจะไปรับบริการทางการเงินหรือว่าทำธุรกรรมทางการเงินการลงทุนต่างๆเพื่อที่ท่านจะได้สามารถพัฒนาแนวทางการดำเนินธุรกิจและการเปิดเผยข้อมูลของบริษัทได้สอดคล้องตามนโยบายของผู้ให้บริการนะคะสำหรับฝั่งสถาบันการเงินการลงทุนเองนะคะก็หวังว่าท่านจะได้เห็นตัวอย่างแล้วก็แนวปฏิบัติที่ดีจากการแลกเปลี่ยนเรียนรู้ในวันนี้เพื่อไปพัฒนาต่อยอดกระบวนการให้บริการทางการเงินการลงทุนของธุรกิจของท่านต่อไปนะคะเพื่อเป็นการสร้างความเข้มแข็งเป็นการบริหารความเสี่ยงของพอร์ตโฟลิโอในการลงทุนและการปล่อยสินเชื่อแล้วก็เป็นการเตรียมความพร้อมให้ธุรกิจของท่านสามารถเดินหน้าและเติบโตต่อไปสอดคล้องกับทิศทางของประเทศและก็ทิศทางของโลกนะคะสุดท้ายนี้นะคะตลาดทรัพย์ต้องขอขอบคุณ UK Pack Green Recovery Challenge Fund นะคะที่เป็นสปอนเซอร์ในการจัดกิจกรรมในครั้งนี้ตลอดทั้งปีพร้อมกันนี้ก็ขอขอบคุณ CDP แล้วก็ GRI ในการเป็นพันธมิตรที่ดียิ่งของตลาดหลักทรัพย์มาอย่างต่อเนื่องด้วยค่ะขอบคุณค่ะ
Thank you very much. And before moving on, I would like to extend a big thanks to Kun Ratwali and the team at the Stock Exchange of Thailand, in particular Kun Aruni and Kun Narerat, who has been key partners for us to successfully implement this capacity building program. Next, we are also pleased to have a recorded message and opening remarks from Kun Archina Patama Sukon, who is the Assistant Secretary General of Stakeholders Relations Divisions with the Securities and Exchange Commission in Thailand.
สวัสดีค่ะผู้มีเกียรติทุกท่านที่เข้าร่วมออนไลน์ในวันนี้นะคะดิฉันในนามของสำนักงานกลต.มีความยินดีเป็นอย่างยิ่งที่ได้รับเกียรติจาก British Embassy Bangkok Carbon Disclosure Project และตลาดหลักทรัพย์แห่งประเทศไทยในการกล่าวต้อนรับในงาน Capital Market Workshop ในหัวข้อ TCFD in Finance ในการเปลี่ยนแปลงสภาพภูมิอากาศเป็นเรื่องที่เร่งด่วนและมีความสำคัญอย่างมากต่อการดำเนินธุรกิจในปัจจุบันโดยเฉพาะในช่วงสถานการณ์แพร่ระบาดของโควิดและเพื่อให้ประเทศไทยสามารถบรรลุเป้าหมายความเป็นกลางทางคาร์บอนภายในปี 2050 และการปล่อยก๊าซเรือนกระจกสุทธิเป็นศูนย์ในปี 2065 ตามที่ท่านนายกรัฐมนตรีได้มีการประกาศเจตนารมณ์ของประเทศไทยพร้อมยกระดับการแก้ปัญหาด้านสภาพภูมิอากาศในการประชุมรัฐภาคีกรอบอนุสัญญาสหประชาชาติว่าด้วยการเปลี่ยนแปลงสภาพภูมิอากาศหรือว่า COP26 นะคะกลต.ในฐานะหน่วยงานกำกับตลาดทุนจึงได้มุ่งมั่นในการส่งเสริมและพัฒนาตลาดทุนอย่างยั่งยืนมาโดยตลอดโดยที่ผ่านมากลต.ได้เข้ามามีบทบาทส่งเสริมการเงินเพื่อความยั่งยืนและกำหนดประเด็นความยั่งยืนเป็นหนึ่งในเรือธงของแผนยุทธศาสตร์ของกลต.โดยได้ออกหลักเกณฑ์นโยบายและจัดกิจกรรมให้ความรู้อย่างต่อเนื่องเ พื่อส่งเสริมการดำเนินธุรกิจที่มีธรรมาภิบาลและมีความรับผิดชอบต่อสังคมและสิ่งแวดล้อมครอบคลุมในเรื่องที่เกี่ยวกับการเปลี่ยนแปลงสภาพภูมิอากาศซึ่งมีการดำเนินการดังกล่าวสอดคล้องกับทิศทางในระดับสากลเพื่อสร้างความตระหนักรู้ความเข้าใจในเรื่องความเสี่ยงและผลกระทบจากสภาพภูมิอากาศต่อธุรกิจกรต.ได้ออกข้อกำหนดการเปิดเผยข้อมูลการปล่อยก๊าซเรือนกระจกตามแบบ 56-1 วันรีพอร์ตซึ่งจะมีการใช้บังคับในปีหน้าคือปี 2565 เพื่อยกระดับการเปิดเผยข้อมูลด้าน ESG ของบริษัทจดทะเบียนในการเปิดเผยข้อมูลแบบ 56-1 วันรีพอร์ตให้มีมาตรฐานทัดเทียมระดับสากลโดยเฉพาะอย่างยิ่งข้อมูลเกี่ยวกับการปล่อยก๊าซเรือนกระจกซึ่งถือเป็นพื้นฐานที่สำคัญในการเสริมสร้างความสามารถของภาคธุรกิจในการบริหารจัดการกับความเสี่ยงที่มีนัยสำคัญที่เกิดจากสภาพการเปลี่ยนแปลงภูมิอากาศทั้งนี้แม้การเปิดเผยข้อมูลทางการเงินที่เกี่ยวข้องกับสภาพภูมิอากาศจะไม่ใช่เรื่องใหม่สำหรับบริษัทจดทะเบียนทุกแห่งโดยในปี 2564 มีบริษัทจดทะเบียนนำส่งแบบรายงาน 56-1 วันรีพอร์ตแบบภาคสมัครใจจำนวนทั้งสิ้น 169 แห่งและบริษัทบางแห่งก็กำลังพัฒนารายงานไปสู่มาตรฐานสากลแต่ก็ยังมีบริษัทอีกจำนวนมากที่อาจยังไม่คุ้นเคยโดยกรต.ให้ความสำคัญและมุ่งมั่นในการขับเคลื่อนให้บริษัทจดทะเบียนดำเนินการตามคำแนะนำของ TCFD ซึ่งจะทำให้ผู้ลงทุนซึ่งปัจจุบันให้ความสำคัญกับการลงทุนที่คำนึงถึงสิ่งแวดล้อมมีข้อมูลเกี่ยวกับบริษัทที่เพียงพอในการตัดสินใจลงทุนและสามารถนำข้อมูลมาวิเคราะห์ความสามารถของบริษัทในการรับมือกับความเสี่ยงด้านสภาพภูมิอากาศและเปรียบเทียบในกลุ่มอุตสาหกรรมเดียวกันได้ซึ่งจะนำไปสู่การดึงดูดเงินลงทุนจากผู้ลงทุนทั้งภายในและต่างประเทศกลต.จึงได้ประกาศการเข้าร่วมเป็นผู้สนับสนุนมาตรฐานการเปิดเผยข้อมูลทางการเงินที่เกี่ยวข้องกับสภาพภูมิอากาศหรือ TCFD Supporter อย่างเป็นทางการตั้งแต่เมื่อวันที่ 30 ธันวาคม 2563 ซึ่งถือเป็นก้าวสำคัญที่แสดงให้ผู้ลงทุนทั่วโลกเห็นว่าตลาดทุนไทยมีพัฒนาการที่สอดคล้องกับกระแสโลกที่ให้ความสำคัญกับการขับเคลื่อนการเปลี่ยนแปลงสภาพภูมิอากาศและในปี 2565 กลต.ร่วมกับ CDP จะจัดทำโครงการที่เกี่ยวกับ TCFD เพื่อการต่อยอดและประยุกต์ใช้ได้จริงในการดำเนินธุรกิจและเพื่อให้ภาคธุรกิจสามารถจัดทำรายงานเปิดเผยข้อมูลได้ตามมาตรฐานสากลดิฉันคิดว่าการจัดทำเวิร์กช็อปในครั้งนี้จะเป็นประโยชน์แก่ผู้เข้าอบรมเป็นอย่างดีมุมมองที่เกี่ยวกับแนวทางการเปิดเผยข้อมูลตามมาตรฐานสากลสอดคล้องตามเป้าหมายการพัฒนาที่ยั่งยืนรวมถึงโอกาสและความท้าทายในการดำเนินธุรกิจอย่างยั่งยืนดิฉันในนามของกลต.หวังว่าผู้เข้าอบรมทุกท่านจะได้รับความรู้ความเข้าใจจากเวิร์กช็อปในครั้งนี้โดยความร่วมมือของทุกท่านจะเป็นพลังสำคัญที่ช่วยยกระดับการเปิดเผยข้อมูลการปล่อยก๊าซเรือนกระจกตามมาตรฐานสากลและพัฒนาตลาดทุนยั่งยืนต่อไปขอบคุณค่ะ
Thank you very much, Kunarchina and the Securities and Exchange Commission for joining and sharing with us today. We really appreciate it. To start today's workshop, I will hand it over to my colleague, Monica, who leads CDP's Capital Markets team in Southeast Asia to provide an introduction and overview to the workshop today. So over to you, please, Monica.
Thank you very much, Fred. Once again, everyone, thank you for joining this workshop today with us. I know many of you have participated in the previous workshops, but however, I am going to give a quick overview of CDP and TCFD for those who are joining us for the first time. Next slide, please, Fred. So how does CDP work? As you know, CDP is a global non-profit organization, and for 20 years, we have been working, developing, and running an environmental disclosure platform. How we do it is we have over 600 financial institutions and over 200 large purchasing organizations requesting information from companies to disclose to CDP. The information we asked historically has been majority in listed companies, but now we are expanding to other asset classes. and an increasing number of companies within the value chain are being requested as well. All this is done through a set of standardized questionnaires. As you can see in the middle, there are 3 thematic themes, one on climate change, another on water security, and the 3rd questionnaire on commodities related to deforestation. And these questionnaires are fully aligned to the TCFD Task Force on Climate-Related Financial Disclosure. Next slide, please. So in terms of numbers disclosing to CDP, this year we had the largest pool of companies disclosing. So in 2021, we had over 13,000 companies globally disclosing to CDP and over 1,000 city-states and regions. CDP collects the data in a standardized and comparable way to make its decision useful for our signatories and purchasing organizations who we feed back the information to. The data we will provide is used as insights and tools to really drive capital towards green investments and products, while also supporting investors and lenders to engage with companies within their own portfolios and incentivize disclosure and market transparency. And the reason why we really do this is because CDP believes transparency is the foundation for environmental action. Next slide, please. So a little bit more of a breakdown for our region. So for this year, out of the 13,000 companies disclosing globally, there were over 3,800 companies headquartered in the APAC region. China and Japan companies leading the way, and 64 Thai companies who are disclosing to CDP this year. Overall, we had about a 30% increase year on year compared to last year. And if you look into the specific markets, the trends or reasons for disclosure is slightly, I would say, differ. For example, in China, the vast majority of disclosures are actually being requested through the purchasing organizations within their value chain. For Japan, for example, there's a real push for TCFD alignment disclosure, and CDP has worked quite closely with the Ministry of Environment in Japan, which really reflects in the disclosure numbers as well. And as we see more and more regulators and stock exchanges coming out in support for TCFD, we hope to see this increasing trend continue as well. Next slide, please. So lastly, before we go into the actual presentations, I do want to touch upon what we're seeing in the market very recently. We do see a wave of mandatory environmental disclosure coming out globally this is. And until recently, I would say most of the disclosures really have been built around voluntary disclosure led by the private sector. And now we see a trend in that voluntary disclosure becoming more mandatory as well. Of course, there's still some jurisdictions who have come on a more voluntary basis, but we will see more and more increase in requests for a mandatory disclosures coming up this year and next year onwards as well. And with that note, I think it's a good time to hand over to our very own policy team, Manager of External Affairs, Charlotte, to present on the harmonization of international ESG standards. So to give a brief introduction about Charlotte, Charlotte manages CDP's engagement within the broader ESG ecosystem. She has previously worked at GRI, focused on enhancing the measurement of the private sector's contribution to the SDGs and the role of transparency and corporate reporting. So without further ado, I'll hand it over to you, Charlotte.
Thank you, Monica. Hello, everybody. Very happy to be here with you today to give you an introduction to global ESG standards and frameworks. I hope you can all see my screen properly. So what I will take you through today I will give you a bit of an overview on the current state of play when it comes to ESG standards and frameworks. I will talk a little bit about the project led by the IFRS Foundation. Then we'll go to developments in the EU who are also working on developing corporate reporting standards. And last, I will give a few other regulatory developments influencing disclosures. So looking at the ESG reporting ecosystem, I just wanted to give this first idea of all the actors that are involved in the ecosystem and that play a role in enabling reporting exercise. And right now we're going to focus on the frameworks and standards, but as you can see, there are many more actors that play a role. So sometimes the information, the different tools, and the different actors you can find, it can all be a little bit overwhelming to understand how they can help you report. And this, I think, helps you structure it around it to realize what role each play. In red on top, I highlighted a new platform that was launched yesterday by the Impact Management Platform, IMP. And this platform gives you access to all global tools that helped a reporting practice and highlights the purpose of each and how they can support you. So I would definitely invite you to check that out, as I think it can be quite helpful. Here's an overview of the global 5 ESG corporate standards and frameworks that have engaged over the past few years to harmonize, to help convergence, and just simplify the reporting landscape. I don't need to introduce CDP and GRI anymore. We have then CDSB, the Climate Disclosure Standard Board, which provides frameworks and guidance on aligning global mainstream corporate reporting model to equate natural capital with financial capital. We have Integrated Reporting Council, which helps to connect the financial and non-financial reporting exercise. And lastly, we have SASB, the Sustainability Accounting Standard Board, which provides standards for sectors on how to disclose financial information on sustainability topics. And recently, you might have heard the IRRC, so the Integrated Reporting Council, has merged with SASB, and they're now the Value Reporting Foundation. So now we will have 4 bodies essentially. Now, looking at the state of play, over the past 2 years, we've had major announcements which have influenced this landscape. But if we look back at what helped kick off these announcements, before, we've had an increase in demand from stakeholders to understand the connection between sustainability topics and financial risks and opportunities. Regulators, standard setters, and policymakers have been trying to answer that request. Large mainstream investors are also increasingly interested into investment decision and calling for improved disclosure. And lastly, the standard setters and reporting framework have been working on a coordinated solution. So looking at the major announcement over the past 2 years, we've had the European Union announcing that they will start developing sustainability standards with a double materiality. I will come back to the materiality concepts in a bit. Later in April 2020, IOSCO sets up a task force on sustainable finance, which committed to support the creation of a global corporate reporting system through collaborating with the IFRS and the standard setters. I added here the TCFD, which launched a consultation. Oh, sorry, that was 2021, so that one should be much further down. Then we have September back to 2020, the IFRS Foundation issued a consultation on the potential role it could play in the global corporate reporting system. That same month, the 5 global standards and framework setters I just presented the previous slide, shared a shared vision for a global corporate reporting system. I will take you through that a bit afterwards. Later in December, they also published a climate-related financial disclosure standard prototype, which later was used by the IFRS to develop their own climate standard. EFRAG, which is the European body in charge of developing the standards, published recommendation on their non-financial reporting directive, as well as a climate standard prototype. And the last, the very recent announcement from the IFRS last week, they launched the board, the ISSB, which will be in charge of developing and updating the standards developed by the IFRS. And they also published 2 initial prototype standards, which will be further refined and open for public consultation in the years to come. And lastly, they announced the convergence with VRF, so the Value Reporting Foundation, which is the merge from IRC and SASB, as well as with CDSB. So as you can see, the landscape is simplifying with those convergence. This is a lot of announcement, a lot of movement. And now let's dig in a little bit deeper into what it means concretely and what have been created. Here, I wanted to present to you the global corporate reporting system model that 5 organizations developed back in 2020. And it's a shared vision of how this global system could work based on the existing reporting standards and frameworks. So as you can see, let's start from the bottom left, the pink square. There, it's about the financial information and the financial standard setters, so IASB and FASB, which provide those standards to disclose financial information. On the right side, you have SASB and CDSB, which provides the standards to disclose sustainable financial information. And together, IRC on top helps you connect those 2 types of information into an integrated reporting type of reports. On the right side, you have GRI, which provides the standards to report on sustainable impact. And above, you have CDP, which enables you to disclose those information in a structured way through technology. So this is the model the 5 organizations presented globally as a potential way to work the system. And the second model the 5 organizations presented was the different materiality concepts and how they work together, because each type of reporting has often their own materiality model and principle, which explains how to identify your topics to disclose on. So if we look here at the broader square, the blue one, the first materiality model is to include all topics that your organization impacts on the economy, environment, and people. So that's the broad picture. Then going one down, it's the purple square, which is reporting on topics that are material for enterprise value creation. So that will be relevant for financial risks and opportunities. And this is again covered by SASB, CDSB, and enabled by IRC. At the bottom, you can see the connections with the standards. And the last square, the pink one, is one level down again, and it's your financial information, your financial accounts. And basically, this is how we presented that they all fit in and how all the information you disclose are connected to the standards. This is an introduction to the standards and to the concepts. And now I will talk a little bit about the current project of the IFRS Foundation. So last week, it's already 2 weeks ago, on the 3rd of November, the IFRS made 3 announcements at COP. They announced the formation of the board, the International Sustainability Standard Board, which will be in charge of developing the sustainability standards for investor information needs, so solely related to financial standards. If we look back at the squares, that's the middle one. They also committed to converge with CDSB and VRF. And lastly, they published 2 prototypes, one on climate and one on general disclosure. You can access those already and have a look, but they will go through public consultation next year. So what is the focus of the IFRS standards and the project? It first focuses on investor and enterprise value. So as I said, it's financial standards. Second, regarding the sustainability scope, it intends to touch on all sustainability topics, and it started with climate as a priority. The other topic to be prioritized will be decided next year. It intends to create a global baseline on which jurisdictions can add on. If they decide to use the IFRS standards, they can then add on other topics or other metrics they want their corporates and investors to disclose on. So they want to allow for national context to also an existing reporting requirement to be complementary. Lastly, they committed to build on existing frameworks, including TCFD, which really has built their prototype climate standard. If you have a look, it is structured around the TCFD. Now going to the EU. So the EU has been working on updating their reporting requirements, but also on developing standards. And all corporates with activities in the EU will have to use those standards to report on those activities. So that goes beyond EU companies solely. That's why it might have a certain global impact, and why I wanted to talk a little bit about it with you today. So let's first go to the bottom part of this slide to explain to you the structure that the EU standards will have. So they will have sector agnostic standards, sector specific, and entity specific, so 3 levels. Those 3 will cover 3 reporting areas: strategy, implementation, and performance measurement, and will cover 3 topics: environmental, social, governance. The environmental will include climate mitigation and adaptation. And this together will be the sustainability reporting that enable you to create your information in the sustainability statement. So what has the EU announced lately? They say that climate is a key element, and they've also published the first climate standard prototype, which is also available. And a very important point, they committed to international cooperation. So what does that mean? And here again, we see an effort to connect with existing reporting framework and standards. It is a bit of a complicated visual here, but to make it simple, the climate standards have been working with GRI on developing their standards, but they've also used the TCFD, and they are talking to the IFRS to ensure compatibility. On the sector side, they've been working with the standard setters that had sector-specific indicators. We have SASB and VRF here at the bottom. So this is quite good signals that we will not end up in different type of reporting frameworks, but hopefully that everybody with a global reach is working together today to simplify the landscape. The last few points on other regulatory developments that are influencing corporate disclosure. As Monica presented, there is a rise of mandatory reporting regulation with a focus on TCFD. We expect many of those jurisdictions to go beyond TCFD, but that's how they start, because the TCFD provides a good limited framework, very clear 11 recommendations, and you can use the reporting standards that exist to help you report to TCFD, as I'm sure this has been covered in these workshops. So that's just the first step, and that's very welcome and enable also comparison across the globe. We know that the G7 countries have expressed support to move towards climate-related financial disclosure mandatory reporting. A second trend is the development on sustainable finance taxonomies, which are currently considered in more than 20 jurisdictions. This will also have an impact on what information needs to be reported by both investors and corporates, depending on how sustainable activities are classified by those taxonomies. Lastly, there is discussions around the current challenges with data accessibility and quality at global level, and the role of digitization, the role that ESG data scoring provider and that potential global corporate data spaces could play are taking place. We don't really know yet where this is going, but definitely the role of digitization is something that's being looked at to make sure we have data accessibility, comparability, and quality across corporates and across regions. Looking ahead, what can you expect in the coming year? And one is the launch of the IMP platform, which already took place yesterday. So again, I invite you to take a look if you want to get an understanding of all the tools that can help a reporting cycle. By October 2022, the EU has announced that they will adopt the first set of standards covering all topics. And by the end of 2022, we are expecting the IFRS ISSB climate standard to be launched as well. I've added a couple of resources for you, and the link are attached to the slide. And that is it. Thank you for listening. I hope this was useful, and I'll be available if there are any questions.
Sorry, can you hear me?
Yes, we can hear you.
Is freezing a little bit here. Just bear with me for a second. I'll just continue speaking in case, assuming that you can hear me. Maria, please tell me if not. But yeah, thank you very much for joining us, Charlotte. If you have time to stay on for the Q&A session that we have in about 20 or 30 minutes, that would be great. We have a few questions that has come in. Next on the agenda, we are joined by Dr. Alinette Adig to share about the GRI standard for SDG and sustainable finance reporting. As the head of GRI's ASEAN hub, Dr. Alinette is tasked to promote the practice of sustainability reporting across the region by working with relevant stakeholders. And Dr. Alinette has also previously worked in academia and both in the public and private sectors, and holds a PhD in public policy. So Alinette, I'll hand it over to you, please, and I will try to fix my computer in the meantime, because I'm having some technical issues. Thank you.
Thanks, Frederick. Let me just share my screen, so please bear with me for a few seconds. I hope you can see it now. Let me just make it big. Okay.
Yeah, we can see it. Looks good.
Okay, fantastic. So good afternoon, everyone. Thank you for inviting me. So at this point, I am tasked to talk about what is the relevance of sustainability reporting, and particularly GRI standards, to the SDGs and sustainable finance. So first, what is sustainable finance? Basically, it's a long-term ethical vision of financial investing. It seeks to reconcile economic performance with positive social and environmental impact to fund sustainable companies or sustainable activities. And what's driving the demand for sustainable finance? A few things. Of course, I'm sure both. I hope and I'm sure, or I'm sure that you have heard of the planetary boundaries. So basically, these are the planetary life support systems that are essential for human survival. So if you can see your screen, that graphic on top, those are the 9 planetary systems, and there is like a threshold. If we exceed all of them, then it is the end of the planet as we know it. Sorry for being so morbid. And another demand is, of course, because of COP26, and we're paying more attention now on the dangers or the risk, the persistent risk and existing risk of climate change on the planet. And then, of course, in 2015, the SDGs was launched, and the SDGs presents the 17 goals for humanity. And the idea is to achieve it by 2030. And of course, we need money to fund the SDGs. and the current crisis that we're living now, COVID-19, and it has shown the vulnerabilities of existing systems to crisis, and we're already living within the climate crisis as well. So because and here within the region, we see so there are 10 ASEAN countries, right? So 8 of the 10, if I'm not mistaken, 8 of the 10 ASEAN nations, ASEAN countries have some form of sustainable finance mandate or regulation from financial regulators, because they recognize that climate change poses a risk, a clear and present danger to the stability of the economy. So it poses physical risk and transition risk. So even the financial regulators are starting to have recognized that. So which means there is a need to align public and private financial resources to address these multiple challenges. Because sustainable finance is intended to build resilience as well as develop companies' ability to mitigate current crisis, resilience to future crisis. And with the growth of sustainable investing and financing, then ESG strategies are more and more demanded from companies, and they have to demonstrate this by integrating or setting KPI targets at the very core of their existence. Okay, so I've mentioned the Sustainable Development Goals. Money is needed to fund the Sustainable Development Goals. In fact, according to the UN, 2.5 trillion a year is needed to achieve the SDGs. And as the rate things are going, we're really lagging behind. A report by the UN ESCAP shows that Southeast Asia as a region is lagging behind on all 17 goals. On some goals, we're even negative. I think we're only on track on one goal, which is industry, innovation, and infrastructure. And we know that the private sector is leading the way in terms of industry, innovation, and infrastructure. So if more money could be channeled to other sustainable activities, then we would be able to achieve the SDGs. Okay, so how is business reporting relevant to sustainable development? So particularly for investors, right? So there's now demand from investors for companies to be sustainable. And why are investors looking into that? Because investors are universal owners. So what do we mean by universal owners? Institutional investors in particular are highly diversified, and they have long-term portfolio that are representative of the global capital market, meaning they are exposed to growing and widespread cost from environmental damage caused by companies. So therefore, they have, as asset managers, they have a fiduciary duty with their with asset owners to ensure that the money that they manage or the assets that they manage are being managed in a sustainable way. And how do they do that? They have to look at how companies are managing their ESG performance. Okay, so with that, having access to ESG performance or ESG reports of companies, they can then make informed investment decisions and be able to channel capital to responsible businesses. And as investors and at the same time, companies would be contributing to sustainable development. Okay, so now, as I said, there is now a recognition from among investors on sustainable development and investment. So there is this, I'm sure you've heard of the principles for responsible investment. So currently they have 3,500 signatories from among varying from asset managers, asset owners globally. And collectively, cumulatively, these asset owners and managers own the asset under management collectively amounts to around 103 trillion US dollars. So you can see on your screen what are there are 6 principles of responsible investment. Meaning all signatories to the PRI are duty bound to observe all of this when making investments. So basically, what these 6 principles expect from asset managers is that they would incorporate ESG issues into their investment analysis and portfolio management. And not just the principle for responsible investment. So there is also this group called Global Investors for Sustainable Development Alliance, which is also supported by the UN. So they are also requiring certain information from companies on which they invest in. So they're and they look into 4 areas. And the objective, going back, objective of the GISD is to direct concrete solutions to scale up long-term finance and investments in sustainable development. So I think the GISD is composed of the largest 20 major financial institutions in the world. So I'm sure Thai companies would have some engagements or dealings with either PRI signatories or GISD alliance. So this is worth noting that if you're any of these are your investors, I am sure they're looking for this kind of reports from you as a company. So for the GISD, they're looking for performance or reports in 4 areas. One is the governance aspect, meaning how do the companies governance disclose the company's governance around SDG related risks and opportunities. And you can see on your screen the recommended disclosures. I will not go into detail. I think this slide will be shared later. And then after the governance, of course, if you have the right governance in place, of course, you should also have the strategy to support your sustainable development strategy and purpose. And after that, you're also required to disclose your risk management processes or approach, meaning you have to disclose how the company identifies, assesses, and manages sustainable development related risks. And last but not the least, of course, you have to disclose the metrics and targets used to assess the company's alignment with sustainable development. So basically, this slide and the previous slide, I just want to emphasize that as companies who have investors, you should and more investors are demanding to look at the ESG that companies that they invest in are have positive ESG impact. So that's why reporting is important if you want to access sustainable financing. Okay. On GRI's part, we have produced a 3 document that promotes effective reporting on the SDG. So this is I think we released this in 2-3 years back in partnership with PRI and the UN Global Compact Network. Now, as you may have heard, we have updated the universal standards, but basically these are guidelines, particularly the investor, this part, the one addressing investors' need in business reporting on the SDGs. Even with the new universal standards, this would still be relevant. So what does this document entail? So basically the idea is that it provides guidance to better align corporate SDG related disclosures with investors' information needs. So last year, KPMG released its report on sustainability reporting, and they identified 2 drivers that on the increase of sustainability reporting. One is, of course, mandatory disclosures, and another is increasing investor demand. So since investors are now demanding for ESG information from companies, then companies are, it would be beneficial for companies to be able to produce a report that addresses investor needs. So this guidance document that GRI produced would be able to help you on how to align your report with a report on how you contribute to the SDGs, and at the same time address the information that your investors needs. So it also includes recommendation intending to stimulate more investment in business solutions to help advance the SDGs. So this publication is divided into 3 parts. First, it talks about why on the importance of for companies to provide relevant SDG data to investors, which I think I mentioned earlier. And then the second part talks about the elements of investor relevant business reporting on the SDGs. In the previous slides, I showed you the information needed by the GISD. And this is very much, if you're already following the GISD and you want to use the GRI standards, no problem, because it's very much consistent, particularly on the part on metrics and targets, because GRI standards can provide the specific metrics and targets that you can report on as mandated, as required by GISD. And of course, the GRI standards also, we also have reporting metrics and targets on the governance aspects of the company, which is also required by GISD. And of course, the third part is in understanding the SDG disclosure demands of investors. Okay. So basically, what do you need to report on? You need to report on your impact as an organization to the economy, environment, and people. And with the new universal standards, we are putting more emphasis on the effect of the company on human rights. So what are these impacts? Could be positive or negative. This could be actual, potential, could be intended or unintended, short-term or long-term. And as more importantly, your contribution to sustainable development. So how GRI views materiality is inward, outward. So as a company, how do you impact the economy, environment, and society? And in turn, these sustainability impacts, if not addressed accordingly, they can have an impact on the financial performance of the organization. And this is precisely the information that that investors are looking for. Because as I mentioned, institutional investors as universal owners, even if they don't run the company, by the fact that they have money in your company, they would have, they would be affected on how a company manages its ESG impact. So going back to the GRI document, so what are the elements of reporting on the SDGs? So we have divided it into 4 aspects. So when you develop your investor relevant reporting, and I would advise to use the side by side also with the GISD requirements, as well as the PRI, the principles of responsible investment. So there are 4 areas that you could consider or look into, take into consideration when you develop your investor relevant reporting. Of course, very important is your message and approach. So your in your message and approach, you should be able to communicate how the financial reporting relates to SDG reporting. So going back to the impact that I've shown, that I mentioned earlier, your external impact, eventually, if you don't manage the sustainability impacts, it will have a financial impact on your company. And then in terms of strategy and governance, so this is also consistent with the GISD guidelines. Things that you should take note of would be what are the SDG trends that are linked to the key factors driving corporate strategy. And of course, you also have to indicate what are your management approach or policies, and how do you implement these strategies. And then you also have to indicate how your SDG target related performance is evaluated, appraised, and rewarded. In terms of report content, you should look at 3 areas. So first is analysis of risks and opportunities towards the SDGs. So as I mentioned earlier, and as you may know, there are 17 goals under the SDGs, and it includes traditional services or basic services that were traditionally provided by the government, but particularly in developing countries where governments do not have enough resources to provide them. Like, for example, in the developing world, you see, or even some of the developing nations, you see the private sector providing basic services such as education, healthcare, and even water and sanitation. So there is opportunity for the private sector to engage in this SDGs, sustainable development goals. And at the same time, of course, there would also be concomitant risks. Like, for example, if you provide water and sanitation, water is a big issue in the planet where we have shortage of water in a lot of countries. So how do you, having taken advantage of that such opportunity, so how in return, how do you manage such risks that confront your business? And then, of course, quality and balance, meaning that's why we always emphasize for sustainability reporting, companies should not just report on the positive impact, but also on the negative impact. Some companies shy away from the negative impact because they think that it will have a negative perception, create negative perception. But everyone has a negative impact, even all of us, just by sitting here, we emit carbon dioxide. So anyway, my point is everyone has a negative impact, but the important part is when you do your report, you also indicate how you are addressing the negative impact. And then you can also facilitate your forecast by demonstrating the cause and effect relationships that exist between your SDG contributions and business performance. And then in terms of data format, you have to provide data that is standardized and comparable across time and companies. So meaning when they look at your previous report and your current report and even your future report, investors should be able to make a comparison. And that is the benefit of using internationally recognized standards such as GRI. And as you may well know by now, GRI is the most widely used reporting standards out there. So meaning you can even, investors can even do a cross comparison across different companies in different industries, because they're using the same reporting standards, which is GRI. And then let's go to, let me just try to move to the next slide. Okay, so in preparing your report, so you as a company you would prepare the report that would be consumed by the investors. So when doing that, you should both take into consideration, of course, what is the company perspective, and then also take note of the investor perspective. So there are a few areas that you can take into consideration when preparing your report, looking at the perspectives of both actors. So one is, of course, understand and prioritize the SDGs. So as I mentioned, like GISD, they support investment in sustainable development. So therefore, you have to explain why SDGs are relevant to you as an organization, as a company, and how you're contributing to it, and then how you are also engaging your stakeholders. And of course, you just can't say that, hey, I'm supporting SDG 1, 2, or 3. You also have to provide proof for that. So you have to indicate also your baseline objectives and targets. And once you have indicated your objectives and targets, now how do you benchmark this with your peers? Or you can also identify new business opportunities. And then in terms of reporting, you also have to describe management systems, because that is the only way. Again, you cannot just make motherhood statements. So management systems would provide the detail, how you implement all these objectives and targets that would provide the investors, an insight on how you implement and manage those impacts, those objectives and targets. And then in terms of using SDG information, you use the report to engage with investors on results, implement change, and as an input for next reporting cycle. So it's not just a plan. You say, I do this, I do that. Like, you also have to indicate how you have achieved, what are the results that you have achieved. And the GRI standards, with the metrics and targets in the GRI standards, will be able to provide you the tool on how to share, communicate your results. And then, of course, as I mentioned, SDGs also present business opportunities for companies. So you should also indicate that in your report. And from this information that you provide, of course, the investors will be using all this information to screen your report. So you can see in your on your screen what are from the investor's point of view, what are they looking for when evaluating your report. So I think that's all I have for today. If you have any questions, feel free to put it in the Q&A box, or we can discuss that later. Thank you, Frederick.
Thank you so much, Alinette. I will just share my screen here. 1 second. And hopefully my computer issues have been resolved and you can hear me okay. Can you see my slide as well? Okay, so it seems I still have some issues. So thank you very much again for that, Dr. Alinette, for joining us. Next, we are happy to be joined by Esther Platzbecker from PCAF, or Partnership for Carbon Accounting Financials, who will share with us about greenhouse gas accounting standards for financial institutions. Esther is a senior consultant at Guidehouse, where she supports financial institutions and other large companies in measuring and disclosing their greenhouse gas emissions, in setting climate targets, as well as developing implementation strategies to achieve those targets. Esther is also a technical expert on the PCAF methodology and co-leads the PCAF activities in the DACH region of Europe. So thank you very much for joining us today, Esther. I'm sorry the introduction slide is not on the screen, but I will hand it over to you.
Yes, thank you very much. And also thanks for inviting us along to talk. And Sawadee Ka, Tukon. Chan Put Pasatai Nit Noi Naka. Te Toni Chan Put Pasa Angrit. All right. Yes, PCAF, the Partnership for Carbon Accounting Financials, is supported by Guidehouse, where I'm the senior consultant. And Guidehouse is a global consultancy firm that is specialized in energy, sustainability, risk, and compliance for the financial industry. And Guidehouse serves as the secretariat of PCAF, providing technical support to PCAF participants during the development and implementation of the PCAF standard. Yes, and today we're delighted to be here and present to you PCAF that is enabling financial institutions to assess and disclose financed emissions. This is the agenda for my talk today. So I will give you a brief overview of the history and PCAF itself. Then I will introduce you to the value of measuring financed emissions, and then also presenting the overarching methodology behind PCAF, and then also end with how you can actually participate in PCAF. So PCAF is a global partnership of financial institutions that work together to develop and implement a harmonized approach to assess and disclose the greenhouse gas emissions that are associated with the financial institutions' loans and investments. It's a fully industry-led initiative that is funded by philanthropies. It all started in 2015 in the Netherlands as a collaboration amongst banks, asset owners, asset managers, and insurance companies, and was then expanded into North America in 2018, where a group of financial institutions decided to globalize this initiative that was actually launched then in 2019. PCAF is governed by a global steering committee that you can see on the middle part of the slide, which consists of 8 financial institutions that are responsible for leading the progress towards achieving the mission and objectives of PCAF. In 2020, PCAF created the first global GHG accounting and reporting standard that is built upon the greenhouse gas protocol for scope 3, which was released back, as you can see here on the slide on the very left, in 2011. So over the years, PCAF went through several phases of development, and yeah, we launched the first edition of the global standard in November 2020. And as you can see on the bottom part of the slide, it has been reviewed by the Greenhouse Gas Protocol, and it is in conformance with the requirements set forth in the Corporate Value Chain Scope 3 Accounting and Reporting Standard for the category 15 investments activity. PCAF is increasingly growing. We need to update the slide almost every day. So right now, 176 financial institutions in 48 countries worldwide have committed to PCAF, and currently it is representing over 55 trillion US dollars in total assets. Our current network includes commercial banks, financial groups, as well as asset managers and insurance companies. And we boast diversity through the variety and type of financial institutions that are part of PCAF. Currently, we see great momentum, especially in Asia Pacific, in the Asian Pacific region, and also to reach our goal of achieving or reaching 250 PCAF participants globally by the end of next year. The first edition that was published last year currently covers 6 asset classes, as you can see here on this slide. They were chosen at the time of development because they determined to be most relevant for financial institutions globally, and also form the largest share of financial institutions' portfolios. And the detailed methodology for each of the asset classes that you can see here can be found in the standard. Currently, we have a core team on that consists of all the financial institutions that you can see on the right side of the slide. They represent different geographies because we believe in the importance of diversity to create a standard that is truly global and brings insights from a range of regions. And currently the PCAF core team is working on a second edition of the standard. We launched last week 3 new draft methods covering sovereign bonds, green bonds, and emissions removals. And it is currently under public consultation until the 17th of December. So we welcome all stakeholders to participate and provide feedback to the new methodologies. PCAF has regional implementation teams that feed the development of the standard through local collaboration. Currently, it is being implemented in 5 regions: Europe, North America, Latin America, Asia Pacific, and Africa. And each region has a regional implementation team with a clear governance structure. PCAF is an entirely industry-led initiative, meaning that it is driven by financial institutions, and also the formation of national chapters is driven by demand. So the most recent one is PCAF Japan, that was launched very recently through a PCAF Japan coalition. And we also encourage all stakeholders to contact us if you see a need for a national chapter, for example, for Thailand. Now diving into the value of measuring financed emissions. Accounting for GHG, so greenhouse gas emissions, can help financial institutions achieve multiple objectives that include creating transparency for stakeholders, managing financial risks associated with climate policies and regulations, creating new financial products to further the transition to net zero, and also aligning financial flows with the goals of the Paris Agreement. So different initiatives already have responded to these business goals, and we will just have a look into how they do it just now. So starting with CDP that you're already very familiar with, financed emissions are an important metric in creating this asked transparency for stakeholders. And PCAF supports CDP in creating this transparency. CDP asks financial institutions to disclose their Scope 3 Category 15 emissions along the breakdown of emissions by asset class, sector, and geography. And PCAF directly supports financial institutions to answer these questions by providing asset class specific methodologies that then allow for disclosures on these levels. And PCAF and CDP have been working closely to provide transparent disclosures for stakeholders to help them better understand the financial institution's portfolio in alignment to global climate goals and their exposure to carbon intensive industry. Besides CDP, TCFD also PCAF cooperates with TCFD and supports the goals of TCFD to measure and disclose the risks posed to organizations by climate-related policies and regulations. And PCAF supports this objective by providing methodology to measure financed emissions. And financial institutions can use those findings to identify carbon intensive hotspots. And the newest, most recent update is that TCFD now officially recommends banks, asset owners, and asset managers to measure and disclose financed emissions in line with the PCAF standard. Also regarding the overall goal of achieving net zero emissions, greenhouse gas emissions accounting is a necessary step for organizations to better manage their emissions and align with the Paris Agreement. The PCAF standard aims to standardize the approach for accounting for finance emissions to ensure to use a robust and transparent and comparable methodology. So measuring those finance emissions is the important step as it is required for all the next steps that you can see here in this figure of setting a target, of developing an effective strategy, to support decarbonization, and actually to take the necessary action to reduce carbon-related risks. And finally, there is a strong interaction between all the climate initiatives out there. As you can see here in the middle, PCAF is currently the only initiative really focusing on measuring financed emission, but is a good complement to work together with initiatives to offer and build, help and build synergies. Quickly diving into the overall methodology behind PCAF. PCAF uses a robust and consistent approach to calculate financed greenhouse gas emissions. The methodologies in the standards apply the same general attribution principle across all of the asset classes, where you can see the attribution factor in the middle is calculated by determining the share of the outstanding amount of loans and investment of a financial institution over the total equity and debt of the company or a project that the financial institution is invested in. And the denominator is commonly including both equity and debt, which is in line with the leading practices in the financial sector, since the both elements, equity and debt, both contribute to the total finance of the borrower or investee, and avoids double counting. Then for the greenhouse gas emissions part that you can see on the right, PCAF provides different data options that come with different data qualities. So the data for the attribution factor typically comes from the financial institution itself, whereas the emission data ideally comes from the borrower or the investee. And there you have you can use different levels of certain data points where the highest score is given to the audited greenhouse gas emissions, whereas you can also work with sectoral averages, for example, that come with a higher uncertainty, but it's still possible to assess the related emissions. And over time, we ask financial institutions to develop a strategy to actually improve the data quality over time. And finally, how can you participate in PCAF? PCAF comes with, like, joining PCAF, which does not come with any costs, but provides you many benefits because it is a peer-to-peer collaboration where you can actually learn during workshops. We also, from the PCAF Secretariat, provide technical support. We also have a emission factor database that is available for all PCAF participants, and yeah, all the details about the technical assistance can be also found here linked on the website. Yes, and the obligation that comes with all the benefits are that you sign a commitment letter where you commit to assess and disclose the greenhouse gas emission of your financial portfolio. And that means to measure and disclose the portfolio greenhouse gas emissions within the next 3 years after signing the commitment letter. But the coverage of your portfolio is up to your institution. So you can also just focus on one asset class in the beginning, and then yeah, widen the coverage over time. Thank you a lot. This is the end of my section. If you have any questions, please leave them in the chat box or reach out to the PCAF Secretariat via email. Thank you very much.
Thank you so much, Esther, for sharing with us. Let me take my screen up here again. I have restarted my computer, so hopefully this will now work. Yeah, so thank you very much, Esther, and thank you very much, Charlotte and Alinette, for sharing all of these insights with us. As you can see, there is a wealth of resources available to support companies and financial institutions in measuring and disclosing on environmental data and metrics. So in part 2 of the workshops today, we are going to go in and look at this from the perspective of real world case studies and see what some companies are doing in this regard. Before that, we have some time for Q&A and a very short break. We are a little bit behind schedule, so we will reduce it a little bit and restart on the hour. So at 3 p.m. we will start part 2, but we have a few questions that I wanted to quickly run by. One that came in first that I would like to, that I can answer was, is CDP a disclosure platform or an ESG rating? And CDP is actually doing both. So CDP provides a platform and a framework to report on environmental data. And using our scoring methodology, companies will receive a rating or a score from A to D. And we talk more in detail about this in the beginner workshop that you can find on the Stock Exchange of Thailand's YouTube page, which we linked earlier in this slide deck. I have one question here for you, Alinette, as well, if you don't mind. So for GRI, is SDG reporting recommended to do on top of TCFD reporting, or can TCFD reporting address reporting on sustainable development goals as well?
Thanks, Frederick. Well, the essence of sustainability reporting in itself is for companies to report publicly on their economic, social, and environmental impact to share their contribution to sustainable development. So that's why how we define materiality is inward looking out. So as a corporation, how do you impact the very environment that you exist in? And so TCFD, as we know, basically focus on climate risks, right? And just to clarify, TCFD is not a reporting standard. It's a risk analysis tool. So just to differentiate, I think there are a lot of confusion here. Sustainability reporting, you report on what you have performed or achieved in the past year, and you use the GRI standards. Whereas TCFD encourages companies, eventually might be required in a lot of jurisdictions, encourages companies to go through a process wherein they should do a scenario analysis to determine what would be the impact to the company if the temperature increases by 1.5 degrees to 2 degrees. Okay, so this is more on forward looking. Whereas when you do sustainability report, we report on what we have achieved the past year using the GR standards. So it's complementary. Using the TCFD and the GR standards are complementary. It's not either or.
Thank you so much, Alinette, for that answer. Let me quickly see here. Yeah, also, Esther, we have one here for PCAF. So is there a time frame for developing standards for other asset classes as well? And are there any asset classes that are more challenging, and why is that so?
Yes, so it is a continuous process to further develop the PCAF standard. And currently, as I said, there are 3 new draft methods just out there for the public consultation, but the PCAF core team is constantly working on developing more asset classes due to the demand that is communicated to the core team. So of course, if you dive into the drafted methodologies, for example, on sovereign bonds, the PCAF core team decided to actually provide 2 methodologies to receive feedback on and then make a decision. So there was a lot of discussions going on. There was a complicated one, but also like emissions removals is not an easy task. It is currently just telling you how to actually account for emissions removals, but not diving into how to actually calculate them. So there are different challenges out there, and that's also why feedback is always valuable, and also addressing the need for further development of new asset classes.
Thank you so much, Esther. And Charlotte, we also have one quick question. I think I can forward to you. So, why has TCFD emerged as the recommendations of focus around the world in the recent years? So, there's a lot of different frameworks and recommendations out there. Why do you see the TCFD becoming such a big player in this field in these last few years?
Yeah, so I think looking back, and GRI has done a great job at keeping track of policy mandating reporting over the years, and they issue a regular publication giving highlights of the trends. So we know that reporting requirements have been mandated over a decade ago, but they always focused on a specific sector, specific topics. So here what we seeing this past 2 years, it's reporting requirements that apply to corporates at large. So way more broader than what we used to have. And this focus on climate first is also a trend that the world is following, and governments are first addressing climate, and therefore the TCFD is the first easy framework to mandate. But as Ali mentioned, it's a framework giving 11 recommendations, not specific standards and metrics that you need to disclose against. So you still have as a reporter to identify those standards and disclosures that can help you meet the TCFD requirements. But I think it's because there's a focus on climate, and therefore the TCFD has been a tool that governments find easy to refer to. It's clear, it's concise, and it really is a good first step that makes sure corporates and investors are able to meet those requirements and build on it to then broaden the scope. And I think the TCFD has been heavily supported by capital market actors, by financial institutions. So that has really helped, because mandatory reporting requirements on other topics or more narrow, with a more narrow focus, didn't have such buy-in from big institutions as such when a government launched it. So I think this has really helped, and it's welcome. And all we're saying is now it's time to go broader, and we have now a task force on nature, the TNFD that has been launched, who is now trying to do something similar to the TCFD, but on nature topics. So that's what the world is asking for now. Can we have such frameworks for other topics, and then mandatory regulation, I think, will broaden as well.
Thank you so much, Charlotte. Yeah, and thanks again, Charlotte, Esther, and Alinette for sharing with us now. We're a little bit behind schedule, so I'm going to move to the break. So let's do a quick break, everyone, just a couple of minutes, 4 minutes, and then we will restart 5 minutes past 3. So feel free to take a quick break and get a coffee or take a break, and we will see you back in a few minutes. Thank you, everyone.
Restart. Thank you, everyone. We'll start with part 2 now. And let me just share my screen to start. Okay, I hope you can hear me well. And also we will start our main topic of today. It will be most interesting for everyone, I believe, for both corporates and financial institutions who have joined us today. First, I'm going to present on sustainable financing, risk and opportunities, but more on how, the opportunities lie in decarbonization, followed by panel session from some of our regional and global investors as well. So without further ado, I will start my portion of the presentation. So now I'm going to give a very high-level overview of how assessing climate-related risk in line with TCFD can be transferred to opportunities in sustainable finance, with later on focused around case studies, because that really translates better and more useful for you as well to reference. But before I go into that, I am going to go into a link between TCFD, the framework, and CDP questionnaires, the climate change questionnaire. And for many of you, this will be a recap of some of the previous workshops that we have done. So if you recall, in June, one of the workshop was on a deep dive on TCFD. And if you want to know further details on it, you can refer back to that workshop as well, as it's available on the SCT website. So TCFD, the Task Force on Climate-Related Financial Disclosures, really is, as some of the other speakers have mentioned, it is a forward-looking tool that is used by the financial sector, and by design, it really was for the banks, asset managers, and insurers to understand what kind of like climate-related risk impacts them as well. So it is an industry-led initiative that came out of COP21, which is the Paris Agreement. And that really is, how it looks into it is, it starts off with assessing the risk related to climate. And here, you can typically fall into two broad categories, which is the transition risk and physical risk. So transition risk is those resulting from a shift to a lower carbon economy. So here you have the policy and legal changes that come up, technology developments, market changes, and so forth. There's also, of course, the physical aspect of it. So changes due to temperature and the weather, like wildfires, floods, but also the longer term shift in the climate patterns. Apart from identifying the risks, TCFD also covers areas of business opportunities, as you can see on the right-hand side. And it's really to identify the products and services that reduce emissions and some like cost saving from efficient energy sources and so forth. So these risks and opportunities that have been identified really is to see what direct impact it has on the company's financials. So for example, if you just look into, I'm just going to say income statement and balance sheets as examples, but income statement examples could be due to changes in customer behavior. It will obviously lead to an increase or decrease in revenue affecting the company's, company's income. And on the other hand, we do see an increase in expenditure due to new regulations coming out. Also, we do see an increase in litigation due to climate change that is happening right now as well. On the balance sheet side of things, of course, there are some elements as assets being written off in high-risk areas and addressing stranded assets going forward as well. On the other hand, there is, an increased expanded access to capital for corporates, especially as there is increased favor by investors to invest in low carbon-related products as well. So TCFD really enables companies as a whole to consider how these risks and opportunities affect the current financial positions, but also what is in the future as well. And that's where really the forward-looking element comes in. Now, while talking to companies or financial institutions even, I do find that there are sometimes disconnect between how identifying these risks and opportunities come into play when it comes to material risk for financial institutions. So this diagram actually, if you can see at the very top, are the transition of physical risk identified on the climate-related risk. At the bottom, you see the more traditional financial risk that companies or financial institutions will look into. And this diagram really connects the dots, should I say it, so you can go through a list of diverse examples to see how or where it relates through. So just to illustrate an example, I have mentioned earlier today how mandatory disclosure is increasingly coming into play. And that obviously, the policy and legal portion of transition risk will translate into whether it's carbon price being introduced or other elements. It gives a higher burden on the operating cost, and in effect will have an effect on the profitability of the companies. Whether the company reaches out in the debt market, so this will translate more into a credit risk, or if it's a listed company, like many of the companies here, there is a market risk associated with it as well. You can think of many examples, whether it's technology, technology developments that are going on, or other elements as well. Excuse me. But these are some, you can just sit down and think of some examples and go through and see where the two actually are very closely linked together. Now, the next portion is from the TCFD risk and opportunities. I just want to highlight how those recommendations, especially here, I'm going to touch upon the risk management portion of it, translates into the CDP questionnaire, this one especially for the financial services sector. So through this questionnaire, CDP is, really takes out various elements of the recommendations and puts into like a question for each area. And each question translates into a data point, which is standardized and comparable for the investors and for the companies. And more, we have been engaging with regulators as well, who have access to the data and have been using this as a benchmark point in their work going forward as well. So next portion, I'm going to go into some analysis of the questions that I've just shown you. So this is from our financial services sector questionnaire. It was the first time we had added on this sector to our sector-specific questionnaires that have been going out. And this sector, financial sector disclosure, it was really, set to see the readiness of the financial sector as a whole in the transition to a low-carbon economy, how ready they are also in the TCFD reporting that is coming out in many of the jurisdictions. But lastly, also to capture the finance emission that PCAF has just touched upon as well, and how that is really aligned within the investments or loan portfolios to the goals of the Paris Agreement. So in 2021, it's the second year that we are running this questionnaire. We reached out to roughly about 890 listed financial institutions globally, and over 450 have responded. So this is just a list of like some of the coverage and some of the financial institutions who have responded to CDP. And it's a big improvement, I would say, from last year. So the first year that we had run this, there were 330 disclosures. So, and we do see an increase, increase the number of disclosures, especially in the jurisdictions where regulations have come out requesting this information from them as well. The first analysis I'm going to show and share with you is relevant to financed emissions. So this is Scope 3, Category 15 investments. So it's called financial emissions, portfolio emissions. They have various different names from time to time, but it's essentially calculating the emissions owned within the portfolio, whether it's investments or lendings of a financial institution. And when we reached out to our list of, a pool of financial institutions disclosing to CDP, we have found that about half of these companies have responded saying that they do not conduct any analysis to understand how the portfolio impacts relating to climate risk. And it's quite astonishing, to be honest, because it's a well-known fact that majority of the financial institutions' climate impact is driven by their financing. But in a sense, it's the first time that the statement is reconfirmed through data. And one of the things that findings we have found is that from about 25% of those disclosing to CDP actually calculate their financed emissions. And the financed emissions have been around 700 times larger than their full operational emissions. This is the Scope 1, 2, and other Scope 3 non-investment related emissions. So last year's finding came to about 700 times, but in a preliminary analysis of this year, we have found the figures are going to be a lot higher this year, even though we're still going through the process of identifying it. Just as an example, I can give an example of a bank who had roughly last year about 1,000 times in the financial emissions compared to the operation emissions. This year, that is roughly about almost 3,000 times. And we have found that with some of the larger banks, it's a combination of increased quality of data, but also the inclusion of coverage as well. So the boundary that they have included in calculating the portfolio has increased, and that in effect has directly impacted their financed emissions as well. So over time, we'll probably see a larger, more financial institutions looking into this, and I know that many of the banks, asset managers in the region are also working with CDP or PCAF to assess and analyze their own portfolio emissions as well. Another point I'd like to touch upon is the risk and opportunity section of a portfolio of a questionnaire and how that is analyzed as well. So we reached out, as I showed you the questions before. So from those questions, identify what kind of risks are actually financial institutions look into. So the top left-hand table, you can see really shows like the percentage of FIs looking into, yes, they do look into credit risk, or what kind of risk they actually analyze. And you can see that, for example, the operational risk is something that many financial institutions say that they look into. But when you look into the bottom charts, it's really like translated into the impact, but also the dollar amount of the impact as well. So even though, for example, the operational risk, many companies look into it, the actual impact of it in dollar terms is a lot less, say, than the credit risk, and especially for the banks, it's a huge risk that they carry as well. Within APAC region, I must say a lot of the FIs have, one of the highest is actually credit risk in terms of impact and reputational risk, because they realize that this is going to be a huge reputational risk going forward in their business. On the right-hand side is still the impact side of things on the risk, that's the gray portion, and also I've highlighted the impact in dollar terms on the red on the lower side of it. And this really shows in a way that a lot of companies are looking into the opportunity sections of developing new products and services relating to climate risk. But also, in a sense, the flip side is if you look into some of the risk elements of it, you can see that they are slightly underestimating some kind of I think there was a little bit of technical issue just now, some kind of climate-related risk, which is slightly underestimated as well. And I can refer back to one of the things that were mentioned, for example, is the legal litigation that's coming out. And there are increasingly, customers and investors coming in requesting increased fiduciary duties to the asset managers, asset owners as well. And that's been translated a lot into the costs of legal litigations that are coming out as well. Now on to the translating the risk that has been identified into sustainable finance opportunities. Now here, I'm just going to go an overview of like the decarbonization that we've been seeing, especially with COP26 happening, many announcements around commitments around net zero. And through GFANZ, which is the Glasgow Financial Alliance for Net Zero, they've kind of announced during COP26 earlier this month, saying that in terms of private capital, there's roughly over 130 trillion committed in transforming the economy to net zero. But I do want you to, take a step back and see where we are at right now, and also how that is turns in terms of pledges, in terms of degrees as well. So at the moment, we are at around 2.4 degrees as a whole in the economy. And it is still quite a far way off from where we need to be at as well. And this is just a graph showing the funding that's needed to decarbonize. So IEA came out with this report earlier this year saying that around $4 trillion dollars is needed on an annual basis to get to the, to transition clean energy into close to net zero by 2050. In terms of ASEAN, the estimate is around $200 billion per year by 2030. I do have a couple of case studies. I will just go over this very, very briefly, so we have time for the panelists who are actually here to give their own examples as well. So in terms of, from a corporate financing perspective, I would say that obviously there's two ways of going about financing, equity or debt. So in terms of equity, I just wanted to show the Stocks Global Climate Change Leaders Index, which is really capturing all of CDP A-listed companies. And you can see here, compared to the broader index, it has been outperforming on a per annum about 5% for the past 10 decades. And this is another example, a fund by CPR, which is the thematic arm of Amundi, which uses CDP A and B scored companies and companies who are validated by SBTi as a base for their investment universe and use it in their investment process and building up the portfolio as well. Into depth, I will just go into the example straight away. So there's been some cases where CDP scores has been used in sustainability linked loans in the region. So one is by CIMB, and this is really tied to the organization score of a company. The second one is, I would say, a moving trend and something that's interesting because they have actually tied their KPIs, not just to their full organization, but also the engagement within the value chain. So this scores how much engaged they are in the value chain and ties that as a KPI. So without further ado, I will just stop here and turn the table to our panelists as well, who will give further examples as well. Without further ado, I would like to introduce Fatima, who is Director of Hong Kong and Southeast Asia, Australia, New Zealand, and she leads the work in CDP with the corporates, investors, and cities, and has had a long career in the financial private sector as well. So over to you, Fatima.
Thank you, Monica. I think we've had a great roundup of the workshop as of now, hearing from policymakers, standard setters, as well as methodologies and tools that we have built over time, especially from on the subject matter of financed emissions. And I think this is a great segue where we can then now move to the practitioners themselves who are already working. And we've got a set of panelists who have developed from the bank angle, from a financial group angle, as well as from an asset management angle, on how they're approaching the subject matter of financed emissions, of climate change, and how they're working with their portfolio companies. Let me just introduce my panelists very quickly today. I realize we're running a little bit tight on time, so I'm sure within their presentations that they have for us, they'll touch upon some of these aspects that I just mentioned. But very quickly, we've got with us Paul Milone, who is the Head of Stewardship Asia Pacific at BNP Paribas Asset Management. We've got Nikorn Pan, who is Corporate Sustainability Vice President at CM Commercial Bank. And we've got with us Hogan Park, who is Team Lead ESG Strategies at KB Financial Group. Nikon, let's start with you. Since we are in Thailand, it's a Thai audience, and you're one of the few banks that responds to CDP. So you've taken the leadership mantle for the banking sector in Thailand in setting your climate strategies. Perhaps we can, I know you've prepared a presentation for us. So in case that's easier, it would be great to hear from you as well as your bank's approach to climate change.
Okay, I think that first of all, I would like to just thank you, CDP and your alliance for inviting us for these meetings. And I just a bit nervous, which I shared the stage with because actually we consider ourselves as a student. And for yourself, share the stage with the organization that we consider as teachers. But anyway, I think that the way that we structure is we would like to share, even be a student, we would like to share that it is something that we have to learn, and we are not shy to share that right now we are in the learning stage as well. And I just wish that right now you can see my presentation. Okay. Maybe I think that okay, it's okay. I just would like to share with you that in the last 2 years we have quite a busy years because of during the COVID time. Is a time that we just thinking about how we're going to drive sustainability agenda further, as it is a good opportunity for us to set up our sustainability framework, which actually is going to support our vision to be the most admired bank. And is going to support by the 3 main pillars, which is first one is sustainable finance. The second one is creating social impact. And the last one is to create a better environmental future, which actually is the first letter is come as a SCB as our acronym. And I think that we recognize the climate change as one of the key sustainability factor to our organization. That's why we put climate risk and resilience in the better environmental future, and also the activities under the sustainable finance is also our area that we believe that we can support the climate change as well. And I think that to move on, our agenda is we consider that actually for climate strategy, we have, let's say, 3 key elements. But actually, our climate strategy is focused on that one day we can completely be in line with the TCFD by 2023. Because of when we read the requirement, it's quite challenging. And it's quite required that we have to work throughout the bank in order to be fully aligned with the TCFD. And we define the 3 elements to drive us into that area, which is the first one, I think is quite obviously, is a project appraisal. Because we as a bank, I think that when the project is coming in, and as you know, the Siam Commercial Bank, we do a lot of corporate financing and project finance. And we have to consider a long-term risk, because for the nature of project finance, it takes quite a long time to be in our portfolio. And that way, it means that we have to inherit that kind of risk, especially the climate risk. When you understand that when it takes longer time, it's going to be more challenging for everyone. So we just recently have our internal standard that for the project finance, we have to ask our client that they need to have an alternative analysis when the project is emitting carbon greenhouse gas more than 100,000 ton CO2 equivalents per year, as well as the project, they have to do the physical risk if the project is deemed that they have a high ESG risk in the first place. That's how we are focusing on we manage the portfolio when we accept the new projects. And on the other hand, I think regarding the project the climate finance, we cannot just ask our client that, okay, your project is not good enough or your project is too risky. I think the key main challenge that we would like to go is we would like to help our client that one day you can transform your company or your project into a more sustainable way. That is the reason that we launched the Sustainable Finance Program. And it is quite challenging for us because it is the first time that we asked every business unit in our bank to have a sustainable finance target. And the sustainable finance target can be something like supporting the green asset or sustainability linked loan, as the previous speaker talking about that how are you going to construct your structure of the finance to have something that buy with the sustainability performance target, and to help your client or provide more incentive for your client to be a better company for this world. And that is the reason that we issue the sustainable finance target. And the sustainable finance target, to be honest, it is something like a broad one, a big one that we structure. But the most opportunity that we have, it is in the area of the climate change mitigation, something like for the renewable energy generation or the mass transit by rail. It is a big portion of our climate finance, and it is an area that we're quite proud of, that we are continuously doing this area, and hopefully that we can make everyone just moving toward this area as well. And that is the first two areas. And the last one, I think, but it's not least, definitely is about the portfolio review. That the last year we acquired the external consultant to help us with to do the climate risk assessment in our portfolio, as well as the other ESG assessment. And then also this advisor help us with the scenario analysis for us to understand that what our portfolio is going to have an impact regarding the project, the climate change in the next 10 years. And that is actually is for me, to be honest, it's not quite a big surprise because of the heavy polluted sector is quite challenging for them. But we as a bank, we understand them that it is not a job of a bank to say no to our client, I think. But I think it's to point them that what is the opportunity for them to transition toward the lower carbon future, because of I believe that in the future it is a key area that the carbon is going to be the next capital. As a banker or everyone, I think it's you cannot only decide by only money that you're going to get from the projects, but the carbon management is going to be a big thing in the future, near future, I think. And I think the CDP provide quite a good platform for us to understand the TCFD, because of you can see that if you read the TCFD, TCFD is a principle based. When you read it, you understand it. But the challenge is what information exactly that we're going to report to be in line with the TCFD. That is what we find that the CPD is quite helpful for us to understand and to set our plan toward our goal. Maybe I just leave it with that. Okay, thank you.
Thank you, Nico. And I think this was really helpful. And I think what you said earlier is probably the most important. You identified yourself as one of the students, and I think it's important to emphasize that everyone's on this learning journey. And I think what CM Commercial Bank is taking on board is the fact that you're working on a roadmap. This is a long-term strategy. This is something that you want to identify, not just in terms of risk assessment, which you have already started with some of your new project finances, but also with respect to the opportunity, which is where you're coming from with respect to your climate finance departments and sort of expanding or assessing the business or the market expansion from climate finance that will come. I had one follow-on question, which is, you mentioned about the new project finances, where if they hit the threshold of a certain number of greenhouse gas emissions, or if they come from heavy emitting sector, you are asking them to assess their physical risks before you provide a level of project financing. What about your current portfolio, though? How are you addressing the issue with your current portfolio itself?
I think that the current portfolio is quite challenging because actually it is the area that we already agree with the client that, okay, this is what we are going to do. I think that in the past, what we can do best is to help our current client understand that the transformation is crucial. And luckily that because of our portfolio is not quite loaded with the carbon incentive industry, because I think that we catch a bit of trend quite a couple of years before about the renewable energy that rise up. And I think it is helping us that, okay, our portfolio is not looking that bad. But the bigger question is how can we help our client transform into the lower carbon in the future that goes beyond the energy sectors. Something like right now, I think in the COP26, they're talking about carbon credit, about how to get the offset right, because you understand that the offset is a interesting word, put it this way, that can do it right or can do it wrong. But how can we going to factor ourselves in this ecosystem in the future? When somebody tells that the bank is going to less relevant, but we try to be relevant in the new normal, put it this way, either it's after the COVID or the challenging of the climate change, or even the forest issue that is going to coming next. That is area that we think that we would like to understand more.
Thank you, Nikorn. I fully agree. I think we've got some responses from high emitting sectors that already predict, within their internal processes, what the internal price of carbon would be, and what is the internal or shadow pricing strategy that they follow within their business operations. Thank you for that. I think moving to Paul, and Paul, thank you for joining us today. You come with a mass asset management focus, and it goes beyond a particular jurisdiction. So you work towards complex ESG factors across jurisdictions, having to engage with not just your clients, but also your portfolio. It would be great to hear, how you approach the subject matter of climate change.
Yeah, no, thanks a lot, Pratima. And so after Nikorn highlighted the kind of bank's view, I'll focus on us as an asset manager. So as our name indicates, BNP Paribas Asset Management is the asset management arm of the BNP Paribas Group. So we are managing money on behalf of our client and investing across a range of companies. So I understand that we have a lot of corporates here today. So hopefully what I will present will help you understand what we are looking at when integrating climate and sustainability issues in the way we invest. So if we move to the next slide, please. So BNP Paribas Asset Management, just to give a bit of background on our sustainability credentials and approach. So we've been very much among the pioneers in that space. So in fact, since 2002, we launched our first sustainable fund and created our Esg research team. And since then, we have kept on growing our team and enhancing our approach. So now we have a team of 28 people in the Sustainability Center. But beyond that, we also have a network of around 150 ESG champions across our investment teams, our global client group, so that sustainability is really integrated across every department. We've been quite well recognized in the industry in different rankings, but that's not the idea that we want to focus most on today. So now if we move to the next slide, I would like to just highlight what is our sustainable investor approach. So in 2019, we launched our global sustainability strategy, which really highlights that we aim to integrate sustainability and apply our sustainable investor approach across our range of assets. In 2015, after the Paris Agreement, we had already committed to aligning our portfolios with the objective of the Paris Agreement. We are now a signatory of the Net Zero Asset Manager Alliance, which is part of the Glasgow Financial Alliance for Net Zero, which Monica mentioned now has 130 trillion in different assets. And what we wanted to do here is really, with our sustainable investor approach, to be very clear about what we mean by sustainable investment and what are the kind of structure and robust processes that we have put in place. So we have 6 pillars, 4 of which really apply across all investments. So when we are looking at companies. First, I will start with the 4th pillar, which is a bit special here, but just to highlight that one of the cross-cutting themes that we've put is what we call the 3 E's. So the 3 E's are basically the energy transition, so to a low carbon economy, basically addressing climate change, but also environmental sustainability to preserve biodiversity and natural capital. And the 3rd E is equality and inclusive growth in order to have a more inclusive and sustainable growth model. And these 3 E's really drive the way we're going to assess companies, engage with companies, and develop new products that specifically target opportunities related to these 3 E's. So what do we do when we assess companies? First, we have ESG integration across all of our investments. So a lot of people talk about ESG integration today. For us, what we wanted to do is really to be very clear and transparent about our approach. So we set out some ESG integration guidelines, which basically set that across every step of the investment process, we should integrate ESG. So for instance, in the research phase, we would rely on our Esg Scoring Framework, which covers more than 13,000 issuers across the globe, including Thai issuers. But in case an issuer is not covered by our ESG scoring, then our ESG guidelines state that we should do an ESG qualitative analysis, a simplified analysis, to understand what are the key E, S, and G drivers and strengths and weaknesses from the issuers before investing. The idea is to avoid companies with any red flag on governance or climate, etc. Within this ESG integration, I mentioned we rely on our ESG scoring framework. This covers E, S, and G, and within E, one of the pillars or one of the themes is climate change. So to give you an example, if we look at an electric utility company, we would have 25% of the total weight to calculate the score. That is from the climate change pillar, because the ability of power utilities to transition to low carbon power, to facilitate the transition to a low carbon economy is extremely important and financially material. So we're going to look at the carbon intensity of power generation, the carbon emissions of this utility, but also the kind of commitments that they have taken to move away from coal and towards the low carbon power generation. With these ESG integration guidelines, we have a few more characteristics. One is when an issuer has a low ESG score, which happens, we would do an additional qualitative analysis and aim to engage with the issuer to highlight the ESG issues that we have identified and to encourage them to improve their ESG practices over time. Overall, for our portfolios, we target to have a better ESG score than the benchmark, but also a lower carbon footprint, which is aligned with our goal to facilitate the low carbon transition. With the ESG integration, I mentioned one of the pillars we have is stewardship. So here, that's actually my title. It's really about voting in a responsible way in companies that we invest, engaging with companies on different themes, including climate change. So for instance, we are an active member of the Climate Action 100+ initiative, which engages with the world's largest emitters of greenhouse gas. We are also active in other initiatives, such as the Asia Investor Group on Climate Change, Asian Utilities Engagement Program. With stewardship, so engagement that we have, engagement with public policy and regulators as well, we have a third pillar, which is our responsible business conduct and sector-based exclusion. So here, related specifically, to climate, we have some policies that, for instance, our coal policy, where we forbid basically investments in companies that have a certain exposure to coal mining or coal-fired power generation. So if we have a power utility and their carbon intensity is much higher than the global average, then it would get excluded from investments, except if we feel that the company is moving in the right direction, in which case we have the ability to engage with them to encourage the transition. So these are really the pillars that we apply across the board. On top of that, I just wanted to mention that for companies that are more specifically addressing the transition, for example, to the low carbon economy, we have a range of sustainable plus products, which include thematic and impact investing products. So for instance, one of our strategies is the energy transition strategy, which invests in companies that are dedicated to facilitating the transition to a low carbon economy. So this can be around renewables, this can be around low carbon transportation, this can be around battery systems, hydrogen, etc., etc. So this was just to provide a kind of overview of our approach, and I'll be happy, to take any question that you may have about the way we integrate climate and other sustainability issues in our investments.
Well, thank you so much for this. I think really, really comprehensive and gives us a sense of, the in-house really assessment model that you built from scratch for the pillars of environment, social, and governance. I had sort of two follow-up questions. One is, you mentioned that if there is a company that has a low ESG score versus a benchmark, and I think one of the issues that ESG industry has sort of usually faced was with respect to benchmarks, by the sector, etc. So how do you assess that benchmark? I think that was one question. And the second question that I had was, you mentioned about, you adopt almost a negative screening approach when it comes to climate change for certain high impact sectors, which may not be working on a transition plan or may not be having a robust transition plan in place. But on the other side, you also have, a sort of nature positive investment strategies where, if there are companies working on energy transition, etc., you would look at them positively. So if you had a high impact company that was transitioning, which pool of investment strategy would that really fit in?
Yeah, sure. So let me take the second question first. So I think our mentality and our approach is really that when we think that there is scope for engagement and improvement for engagement, engagement is preferred to divestment. So a very good case here is our coal policy. So our coal policy is actually very ambitious. It's one of the strictest in the world. So it means that when we look at Asia and emerging markets, in Asia, we have a high reliance on coal-fired power generation, right? So as a result, a lot of the Asian utilities companies would have a very high carbon intensity, a high reliance on coal. And if we just applied our policy without any scope for engagement, we would end up excluding the whole utilities universe almost. So what we did is, in cases where the company is not in line today, but we believe that they have credible plans in place to align themselves, then we have the ability to put them on a kind of engagement watch list. So we have an ongoing engagement with the company to really highlight what are our expectations towards the transition. And as we engage with them, if we see progress, we continue to engage and we continue not to exclude. If we don't see progress, if we don't see commitment from the company to credibly align themselves with climate goals, then we exclude the company. A recent example that was publicly disclosed, so I can mention it, is a CLP Holdings, so which is Hong Kong listed, Asia-wide utilities company, which had a very high carbon intensity, quite a high reliance on coal. We engaged with them. We have been engaging with them since 2019. We took a lead role in the engagement through the Asian Utilities Engagement Program. And in fact, following all these engagements, and because we believe the company was really committed to aligning to climate goals, together we were able to work it out, and they announced their objective to reach net zero by 2050 and to exit coal by 2040. which is really a good example of how when the company has really a strong climate governance in place, a commitment to align with the climate objective, even if they start from a starting point that is more challenging, they have the scope to align themselves, and through engagement, we can continue to invest with them. To your second question, just about the low-rated companies, this is also very important when we look at the Asian and emerging markets. For a lot of companies, ESG is pretty recent. And what we notice is in some cases, companies have a quite low ESG score, which is more due to lack of policies, a lack of disclosure on sustainability. So instead of just excluding the companies with a low ESG score, we think it's much better to look more in depth into why the score is low, understand if there is any red flag, and then list out what are the areas that we could raise to the company in terms of improvement opportunities. And in some cases, companies have come back to us saying, this is great that you let us know about these issues, A, B, C, and then take an action to improve on this. So we believe it's really a way where engagement can really help the companies on the journey, because as you said, it can be very challenging to take a climate alignment or transition approach. This is the case for banks, it's very challenging, it's the case for asset managers, it's the case for corporates. So everybody has a very challenging task ahead. And as we are moving in that direction, we need everybody to kind of contribute. And we believe that the engagement approach can help steer ourselves in the right direction.
Thanks, Paul. This is really helpful insight for asset managers, especially in the region who may be just starting out or are building their own ESG strategies. I want to take the conversation now to Hogan Park, who is the team lead for ESG strategies at KB Financial Group. I don't know how publicly it's sort of been communicated, but I think wanted to just start off by congratulating KB Financial Group for being the first financial group in Asia Pacific to set its science-based targets. Not an easy task for any financial group globally, and you've taken on the challenge. It would be great to start off with understanding how that thinking came about and what you're planning to do in this transition.
Thank you. So please share my slide. Thank you. Sawadee krap. Good evening from Seoul. I'm Hogan Park, team head of ESG strategy at KB Financial Group. Thank you very much for inviting me to this momentous event. I'm so honored to here to present my company KB's journey to net zero to financial market participants in Thailand. Hopefully, if any, next time, please invite me in person instead of online, since Bangkok is one of my favorite cities in the world. Today, I'm going to show you some brief snapshots how we, KB, are managing to strive to fulfill our net zero ambition. KB Financial Group is a Korean leading financial group with the largest customer base and the most extensive network in Korea. And we are committed to delivering one-stop comprehensive financial services with our 13 subsidiaries, including bank, securities, asset management, insurances, credit card, and etc. Next, please. This slide shows how KB Financial Group has been taking its journey so far. When it comes to ESG, many people say that, it's an alphabet soup with too many acronyms like, as you can see here in the slide, like CDP, TCFD, PRB, SBTI, or PCAP, something, blah, 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 and etc. Yes, it is true. However, understanding what are those was the first step of our journey. Even before we set up our governance structure and deliver accomplishments, we dived into the alphabet soup and explored to learn how the world is changing and how the climate change will affect our lives and businesses. Actively joining a lot of different global climate-related initiatives and alliances enabled us to see far beyond the Korean market towards the global level. At working level, we accumulated deep knowledge and insights. With that, we could tell our management and board of directors what needs to be done to take ESG leadership in the financial industry. I would say long-lasting preparation and studying is one of the key factors of KB's achievements. Next, please. KB Financial Group has been a supporter of TCFD since 2018. Governance, strategy, risk management, and metrics and targets. These four pillars are very essential. It looks so simple, but when we try to report in accordance with the guidelines, we end up with a finding that this is not easy to fill in each box with the relevant words. Most of the things to be covered should be actually happening within your organization. So in that sense, I think TCFD framework gives us a very useful guidelines on what and how to do with the climate change. KB Financial Group has done a lot of work following TCFD guidelines, and the results are disclosed in our sustainability report every year. This year, we are expecting an independent, other than the sustainability report, alone TCFD report alone, no later than at the end of this month. Next, please. If understanding alphabet soup is a prep course of ESG, setting up concrete ESG governance structure is a cornerstone. I dare to say that all our accomplishments and achievements owe to our governance. Unlike other business agenda, the ESG can be driven by top-down approach instead of bottom-up. KB Financial Group is the first Korean financial the group to establish a board-level ESG committee, which is composed of all board members. And as a member of the committee, our CEO, Mr. Yoon, is fully aware of the importance of ESG and climate agenda. As the committee and the CEO take a full responsibility of ESG matters, many bold moves could be taken. For example, in March 2020, we set our mid to long-term ESG strategy. In September, anti-coal financing pledge was announced for the first time among Korean financial institutions. This year, we also announced our net zero strategy with clear targets. Also, ESRM, environment and social risk management principles, was approved by the board. Not only at the group board level, but also at the subsidiary level, we have a ESG management committee and organizations in charge. So this can enable this agenda to be implemented in the business lines. Next, please. Strategy is another important factor. As you can see here, KB's mission is a happier life and better world. To fulfill our mission, we need to strive to achieve our ESG goals and targets. Our strategy, ESG strategy, is well expressed in two slogans like Net Zero Star and the Green Wave 2030. Also, we have a focal point for each ESG factors. Next, please. Having clear target is very, very important. Net Zero Star is the core of our carbon neutrality plan. Our board set out our net zero targets by 2040 and 2050. For scope 1 and 2 emissions, we will reach net zero by 2040 through 42% reduction by 2030. For scope 3 emissions, which is a crucial part of the financial institutions, we plan to get to carbon neutrality by 2050, I'm sorry. And each letter of a star, which is our logo, represent our strategy. Sorry for having cooked another alphabet soup. Under Net Zero Star, we focus on supporting environmentally friendly businesses and accelerating transformation towards the low carbon economy, aligning our strategy with the Paris Agreement, and finally, restoring our environment. And KB Green Wave 2030 aims to achieve 50 trillion won in ESG products, investments, and loans by 2030. Next, please. We have studied and accumulated internal ESG competencies, established governance structure, and set strategic goals. Actually, thanks, Pramita. Thank you, Pratima, for congratulating us and being one of the first financial institutions in the world to get seal of approval by science-based target initiatives was the result of our all-out efforts so far. It took us more than a half a year to measure carbon emissions, to set targets, and to get approval. It was a long journey, but our team, including outside consulting agencies, did our job patiently because we shared the same goal and ambition to lead the market at the forefront of climate change. Board members and CEO, so full support also encouraged us to work on. We know that our ultimate goal is far, far away from us at this point in time. However, we won't stop here. We will continue our journey to net zero as we have done so far. Next slide, please. My final comments are about forward-looking issues. As many of the global leaders and the financial market participants point out, at global level, the pledge to commit to some agenda era is fading away. We need to look beyond that. Now it's time to think about how to implement and consolidate targets and strategy into business activities. I would list the two things briefly: money and disclosure. More money should be scaled up and flow into green financing to tackle climate change and to save the entire human race. That's why financial sectors can play a pivotal role in doing so. To facilitate money move to right direction and just a transition, credible, consistent, and transparent disclosure should be ensured. Those two things are needed to be done. We, KB, will also do our part in global market as well as in Korean market. That's all for now. Thanks for listening. Kokunka.
Thank you, Hogan. I think your journey from just starting to understand the alphabet soup and deciding which of the alphabets actually apply to you and don't. But I think the one that really stood out for me was the fact that you set up your ESG committee at a board level in March of 2020, and in little over a year you've set your science-based targets. I think the scale of although you said the greenhouse gas emission inventory took you about 6 months to complete, I've not known of many financial institutions who've been able to develop something like this within the span of 1 year and decide to implement it. I think one question that I did have for you was, when you set your science-based targets, based on your portfolio, obviously not all asset classes within the financial group can be included within the science-based targets because for some the methodology doesn't exist, and in other cases it might just not be practical. How did you arrive at that boundary of what is your first phase of achieving net zero?
Actually, thank you for asking. And frankly speaking, the coverage of our the SBTA target is like maybe around the 13% compared to the whole portfolio of the whole group, because based upon the PCAF methodology and the SBTA methodology, so some limited the area of the portfolios can be covered. So for example, so the KB Financial Group has a very wide range of exposure to SMEs and the retail, the loans. But actually, according to the PCAF methodology, so those areas cannot be easily covered. So that's why we are focused on the corporate loans and some of the project financing, including some high emission sectors. That's why we could only cover 13% of it. But as the PCAF, the people mentioned that they are going to make new standard methodology, we'll see that new methodology will cover more of that. So actually, but when we set up our targets and we measure our emissions, so we try to cover as much as possible within the area where the PCAF methodology can cover. So as you mentioned, it was a big ambition. It was a big task, but as I expressed in my slide, so the help of the outside agencies and our team, that we have a lot of the people who work for the project patiently did that.
Yeah, absolutely. Hogan, I just wanted to tie your conversation, with what you just mentioned. All of this is essentially a transition roadmap journey. It links to what the bank as a strategy wants to see itself in 10 years time, 20 years time, and linking it back to what Nikon had said earlier with the CM Commercial Bank as well. they're starting with, at least with the new project financing, what are the current levels of engagement we want to have? What are the current levels of assessments we want to have with respect to climate change? Could you speak a little bit about, how that applies to KB Financial?
Actually, I'd like to, so this question is maybe about the recommendations that bank that they want to have their transition pathway. So I'd like to say maybe 3 things in brief. First of all, dive into alphabet soup and learn what's going on out there. And secondly, raise and foster ESG specialists inside your organization. This is very, very important because the thing that I didn't mention in my slide is that, other than the board level ESG committee, actually my team was established in 2018. It's been 3 years since we started our journey. I think that's the point where we started our journey. Since then, we tried to, commit to the global initiatives and alliances. That's the point where we started. So if you want to, move on to next level, you should, invest in your, the human resources and capital. That is very crucial. So without those guys who can lead on at the front line of the ESG arena or climate, tackling the arena, so you cannot move on. And finally, the set up governance structure and define clear role and responsibilities to each organization, because my company had a ESG committee, which is a board level, and they took full responsibility of all ESG matters, and they have a lot of directives from those members, which is so burdensome to us. But I think that made us to move on. So that's my answer.
Absolutely. Thank you, Hogan. I think Nikon just raised his hand, so I just wanted to see if he had something to say.
Yeah, I just adding the Hogan argument that is the key important element is for a bank to have an internal ESG specialist who is understand the environmental and social science to help the real banker. You can say something like that, because actually I graduated from the environmental side and my dad is a banker, and it is something that has to bridge the gap between these two professionals, as well as to have a clear governance structure. And it is the way that we would like to go. Just would like to support the Hogan argument.
Exactly, I totally agree.
Thank you very much. I think a lot of ambition and commitment that Hogan, you mentioned, and then your actual transition pathway, which is taking the step forward from commitment to implementation, linking up very well with what Paul just kind of brought out with BNP on what they're trying to do globally, and the commitment that they have shown in terms of internal resources, not just in terms of the sustainability team itself, but how they have integrated this across 150 sustainability champions within their investment teams. Thank you so much for joining us today. I realize that we've gone slightly over time, so I'll just pause here and hand it back to you, Fred.
Thank you so much, Pratima, and thank you very much to the panelists for joining us today. We have one more speaker joining us today, Mr. Andrew Byrne from the British Embassy in Bangkok. We are having some technical issues to have Andrew join the session today, so we can use the time for some of the outstanding questions.
I'm here, Fred, actually.
Hi, Andrew.
Sorry, Fred, I am here.
Oh, no worries. Perfect timing. We just finished. Great. Thank you so much, Andrea. And great timing as well. We just finished our panel session. So yes, last but not least, for the closing remarks, I'm happy to introduce Mr. Andrew Byrne, Economic and Prosperity Counselor and UK Permanent Representative to UNESCO with the British Embassy in Bangkok. Andrew has been part of several of our previous workshops, and I'm sure many of you will remember him from them. And Andrew is a British diplomat with a background in economics, energy, and business. And as the Economic and Prosperity Counselor at the Embassy in Bangkok, Andrew oversees the UK government's engagement with Thailand on economic issues, science and technology, climate and environment, as well as sustainable development. And as I mentioned at the beginning, today's workshop and the other workshops that we have hosted throughout the year has been made possible through funding and support from the UK government, and the team at the British Embassy in Bangkok have provided us with hands-on support throughout the year. And we are very grateful for this support, and we're happy to be joined by you today, Andrew. So without further ado, I'll hand it over to you for our closing remarks.
Thanks so much, Fred, for the introduction. I have to just mention, is that a Movember mustache I'm seeing on you? It looks spectacular. Apologies, as Fred said, we have some technical difficulties, hence I'm using my mobile phone to talk to you today, so I look a little distorted. Good afternoon, everyone. Kun Ratfali, the Executive Vice President of Stock Exchange Thailand, Kun Archini, Assistant Secretary General of the SEC, colleagues from the Carbon Disclosure Project, and all of you joining us online. It's really a pleasure to be giving this closing set of remarks for the TCFD in Finance workshop. This is the final workshop, actually, in what's been a series, as Fred's alluded to, over the last six and a half months. All intended really to build capacity among Thai businesses seeking to meet climate-related financial disclosure requirements. And we really hope that through these workshops on, I think we've done climate risk assessment and scenario analysis, initial, first of all, introductory workshop, but then climate risk analysis and scenario analysis, greenhouse gas accounting, and work on ESG principles and investment. And then, of course, today, I really hope that you have all come to develop some capability and capacity yourselves to take forward some of this and think about how it works for your own company's disclosures. We've also published a TCFD good practice handbook and the building blocks information. And these provide guidance and specific steps that your companies can take to fulfill TCFD recommendations. So distinguished guests, ladies and gentlemen, as you will know, on Sunday morning, the Global Climate Change Negotiations COP26 hosted by the UK concluded. And I thought I'd just take a minute to talk a little bit about that and then perhaps relate it back to what we're talking about here, because COP26 saw a lot of positive outcomes, perhaps not as positive as we would have liked as the hosts, as the presidency, but a commitment to keeping the goal of limiting climate change to 1.5 degrees alive. Critically, plans to revisit globally our commitments to cut greenhouse gas emissions again next year and to better align them with this 1.5 degree target, which is so important if we prevent catastrophic climate change. Following that conference, over 90% of the world's economy, including Thailand, has announced a net zero target. And more than 100 countries, you might know, pledged to preserve forests and land and think about land use in the context of climate change, with separately more than 100 countries signing up to cut their methane emissions, and many more signing up to eliminate coal-fired power and to do more in terms of adoption of electric vehicles. Perhaps importantly for us, as we talk in a business context here, nearly 500 global financial services firms agreed to align in putting 130 trillion US dollars, that's around 40% of the world's financial assets, in line with the climate goals set out in the Paris Agreement. In other words, they've committed to align their investments, so they're only investing in companies that are aligned with the low carbon transition and meeting net zero by 2050. Thailand, of course, was among those to set out a greater ambition at COP26, and it formalized plans to reach net zero by 2065 or sooner, along with carbon neutrality by 2050. But I think we can all agree that COP26 was not an unqualified success. We've kept the goal of limiting climate change to 1.5 degrees alive, but it is a goal that we will need to work harder next year to meet. And I think if there's one message that we are taking from COP26 as the presidency, it's that if we are to prevent catastrophic climate change, all parts of the global society need to be involved in tackling it. Individuals, governments, and critically businesses, which of course brings us back to today. For companies, therefore, you have, I think, a crucial role in the low carbon transition. And I just thought I'd set out three reasons why we think it's important that you have a clear low carbon transition plan for your business. We've covered the first already. Demand for climate risk disclosures coupled with credible transition plans will continue to increase among investors, among banks, customers, and other stakeholders. Many global financial firms and investors are ready to channel finance into companies that pursue decarbonization and climate adaptation. As the pool of funds available that will not go into low carbon transition grows smaller, the cost of capital may start to rise for those companies that haven't thought about this, haven't set out climate disclosures. The second reason to have a net zero plan, transition plan, is that it will set your business apart from others, for investors, for customers, and perhaps for government regulation. In Thailand alone, more than 70 major businesses have signed up to achieve net zero as part of the Global Compact Network. In the UK, 60% of our large businesses have committed to reach net zero emissions by 2050. Not having a clear pathway to cut emissions could lead to missed opportunities to maintain your company's attractiveness and competitiveness as we move forward. And then thirdly and finally, planning your climate transition will strengthen your business's resilience from potential climate-related risks. As we saw, or I hope started to see in the session where we looked at analysing those risks and planning for them, Thailand is among the 10 most affected countries by climate change in the world, and it is likely to be disproportionately impacted by flooding and heat waves. Globally, we know the risk of flooding is likely to increase by 15% over the next 6 to 11 years as the temperature rises to about 1.5 degrees above prehistoric levels, or pre-industrial levels. But here in Thailand, the impacts of that are likely to be much more fiercely felt. Knowing the impact on your business is imperative. To think about your physical climate change risks and what technologies or approaches you may need to invest in to safeguard your business, even in the medium term. So integrating climate change into your business governance and planning will be critical as we move into a net zero world. I hope that these workshops have empowered you and your companies to make those changes. Before I conclude, I'd like to thank the Stock Exchange of Thailand for its excellent partnership. Without the support of the Stock Exchange, this project, I think, would not have been possible. I'd also like to thank the Carbon Disclosure Project, in particular for their incredible work in putting on this series of workshops. We've commonly seen these workshops attended by 250 to 350 participants, and it's been really fantastic to see. I'd also like to thank our speakers. The SEC has had a particular role in partnership with the UK on green finance and sustainable finance for several years now, and it's part of a longer-term partnership that we have on financial services. We've partnered with them throughout these workshops, and I wanted to express again my gratitude to them. And then we've had speakers from GRI, PACF, KB Financial Group, SCB, and BNP Paribas Asset Management, who've contributed today, I think. All of that has been hugely welcome. Although this is the last workshop in this particular series, I am wholly confident that the UK, and I think I can speak for Carbon Disclosure Project too, will continue to work to support Thailand and Thai businesses on your sustainable journey. Thank you so much for your attention today and for joining us throughout these series of workshops. I hope you have a great evening. Thank you.
Thank you so much, Andrew, for the important and inspiring words. We really appreciate you joining us today and again throughout the whole project. And that concludes our program for today. Thank you again, everyone, to you, the participants, as well as the speakers who joined us this afternoon. I know we are a little bit behind schedule, but thank you for staying on board. We also have some questions outstanding, but I promise we will follow up with all of you after the event. And lastly, before you leave, we would really appreciate if you can take 5 minutes to complete a short survey to provide feedback on this session. So this will help us to improve our capacity building programs in the future. To do so, please follow the link on the screen or the QR code. We will also put the link in the chat so you can find it there. And then when you open the link, please select multi-country and then CDP worldwide as the implementer. And finally, please select Capital Markets Workshop as the name of the training before completing the rest of the questionnaire. So thank you again, everyone, very much for joining. We really appreciate it. And have a nice evening and afternoon, depending on where you are based. So thank you, everyone, and goodbye.